Brandon, Zane, Ray, what's going on? All righty. Give me a second. Damn. All right, let's see if we get this thing going. Get this right here. Okay, display. Almost right. Try it one more time. One more time. There it is. Right there. All bloody righty then. I think we have it all under control. Got it all under control. I think. James, good evening. Thawkins, good evening. The Pursuer, good evening. S-Wares. Mike, what's happening there? Mike, good evening. Zappino. Tumback, good evening. Brim and Bones. David, what's going on? What's going on, everyone? Mark Anthony, hi there. I had a great day of trading experience because of you. Well, thank you, I think. Not 100% sure, but I'd like to hear how it went. Domus, what's happening? Credit Makers, what's going on? Kind of curious what that name means. Lead Sponge. All righty. Glasses. We're ready to roll. Let's do this. All righty, shall we? Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. What I'm looking for is a simple, safe, predictable, consistent 1% per week. House of God, we create digital war art products. Lovely. All right, what do we have here? Ross, good evening. That guy, London, good evening. And sad, sorry. David, happy Tuesday, everyone. Nirvana fan. Oh, my gorilla says his name was Brutus. Cool. I said, hi. Okay, cool. All that kind of nice, neat, fun stuff. Stacy, good evening. What's up, Dud? Not quite sure what Dud means. I mean, is that an acronym for something that I should know? Don't know. Constantine. Energy transfer, huh? Constantine, energy transfer. Let's look it up. Energy transfer. Here we go. Oops. Oh, then here we go. Right there. And I'm going to say politely no to energy transfer. Now, not because the chart doesn't look right. Because look at the chart. Here's the high, here's the low, here's where it was, here's where it is. Up, down, up. Okay, that's easy to see. But what you're not seeing is what's over here. 1856. Well, the 1850s are going for zero. These numbers here are horrible, and I hate those numbers on energy transfer. Now, there's a couple of stocks you will see that have absolutely horrible premiums. I just stay away from them. Unfortunately, energy transfer is one of them. Voss, good evening. Calvin Hill. Ronald, good evening. Furkinator, interesting name. Rob, Ronald, good evening. Dawson, what's happening? Junior Man, okay, good evening. Detroit, the Lord of Detroit. What's going on? All right. All right, so George, let's see what we're looking at. Mark Anthony, okay. What about Kohl's? Today I sold covered call on Kohl's at 850. My average is 848, and it's trading at 836. How do I know if it is better to let the contract expire or roll it over? Well, today's only Tuesday. Okay, that contract expires on Friday afternoon. So why would you want it to be exercised now? Number one, never buy a company you don't want to hold on to. So I'm assuming you bought that wanting to hold on to it. So that being said, well, hold on to it. Collect the premium that you collected. On Friday, check the numbers. See, does it make sense to roll it into next week if you can get another premium of 1% or more? I mean, there's nothing you can do on a Tuesday. And you got Wednesday, you got to wait. Thursday, you got to wait. Friday afternoon, that's when you take a look. What is the current price? What did I buy it for? What did I sell it for? What's the best move to make now? You just got to wait it out, dude. It's a time thing. Friday's coming anyway, so you might as well just get a good play and wait for it. Please, which platform can I use for stuck investments, please? Mr. Brown, how are you today? Now, unfortunately, Mr. Brown, I'm not 100% sure what you're talking about. I always tell people you want to have a conversation, you want to chat, drop your number in the DM, send me a number. I'll give you a call. We can chat. Amazing parties. Mark, what's happening? Jax, what's going on? So, Mr. Brown, I'd love to help you out with the question, but I actually have to see what it is you're talking about in order to give even a halfway educated answer. Because there's a lot of information missing from that little question. Kev Brown, TikTok, what's happening? Mike, what's going on? Steve Fitz, amazing parties. Marks, Jax, Bert, alrighty. So that being said, I don't know what to tell you. Apple predictions. Ooh, I love Apple. Let's look at some Apple. Why not? Apple. Okay, I can think of two songs that have something to do with apples. One bad apple don't spoil the whole bunch, girl, and two, the apple of my eye. Is that right? That's the right song. The apple of my eye. Oh, I forget. Anyway, let's take a look at what are we looking at. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Up, down, up. That's easy to see. We're sitting at 203. Right now, the 203s are going for 265. That's a 202.50. Okay, yeah, you make your 1% on your Apple there if you like Apple. That's always the big question. Do you like this company? Well, that's part of the question. The other part should be, do you like this company at this current price, 200? Well, Apple is one of those few companies. Before we do that, let's move forward and just take a look at the numbers. A year ago, 194. The high of the year was back in the end of December, and that was 260. And then just recently, the beginning of April, this thing hit the bottom of 168.98. I'm going to pause that for a second. Hold tight. Now, from there, look at this. Get your high, your low. Where was it? Where is it? Look at the motion. Down, up, down, up, down, up. Well, you can clearly see it is in an upward trend. And if we zoom in to the last 30 days, it'll give us a good idea of what it is that is possible. Now, check that out. This is the 30-day chart. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down, up. Clearly in an upward trend. Great. Leo, American Express, we'll take a look at it. Just sit tight. All right, so let's take a look at the seasonality chart. Now, some of you may or may not know what a seasonality chart is. Let me briefly explain to you what it is. Whoops, stepped on my plug. Hold on, here we go. All right. This here is a seasonality chart. Let me briefly explain to you what it is and what it does. All the way to the left is January 1st, all the way to the right, December 31st. You're looking at the whole year and how does a stock normally move based on the last 10 years of movement. Well, Apple's done basically the same thing year after year after year for the past 10 or 15 years. So this is what it normally does. It goes up, pulls back, goes up, goes sideways, goes up, goes sideways, goes up. Basically just goes up all year long from the beginning of the year to the end of the year. So why not? Why isn't Apple on your list? And if it is, what strategy are you using with it? Because there are lots of strategies out there. And if you have a couple of good stocks that you really like, you should know when a good time to buy and then sell, and then buy again, and then sell again, and then buy again, and then sell again. Always using the same stocks over and over again. So this way you can get a consistent cash flow on a weekly basis. Well, that's what we're here for. Now, I'm retired, so the money that I earn from my trading has to pay for my bills. They're not huge. I mean, I don't have huge bills, but I do have bills. So I've been working since 1973. So since then, all that money I've accumulated over the years, put aside, well, now I take that and I make 1% off of it every single week. That allows me to pay my bills. Now, some of you might think that's not a lot of money. Well, how much money have you saved at the age 61, 62 years old after working 30, 40, 50, 60 years of your life? It's a question. It's different for everybody. We all have a different way of living, what kind of lifestyle you want to lead. Okay, I'm pretty comfortable where I am. I'm liking my life just the way it is. A few minor tweaks here and there, but hey, that's just life. But here's the thing. We all have to figure out at some point, where is our money going to be? Because we have to have some kind of income coming in when you're retired. When you're retired, now you may use this just to check out of society and say, hey, I have enough to live on comfortably. Why am I still working? Some people think that way. Okay. However, I'm 61. Means every week or every month, my money has to come from somewhere. I'm too young to get Social Security. Okay. I was too stubborn and too pig-headed to be in corporate America. So I had to start my own company, and I was the CEO of my own company, and people worked for me, blah, blah, blah. Needless to say, interesting situation. Life happens to everyone. It doesn't always play out the way you think it will. But at some point in time, the money has to come from somewhere. Okay? Whether you do it yourself or whether you have a money manager do it for you. And I can guarantee you, just about almost 99.9%, that nobody has more interest in your money than you do. So why are you paying someone else to take care of your money? Well, there's always those people who have more money than they know what to do with, and having someone else taking care of it, maybe they have enough coming in. Well, that was not the case for me, which means I got to do it myself if I want to be able to live the lifestyle that I want to live. That being said, so the seasonality chart, look at where we are right here. Definitely in an upward climb. Well, why the hell not? Think about it. Why not? If this is what Apple does every single year, this time of year, over the last 10 years, the blue dot represents today. That's what happened today. Well, look at what it normally does this time of year. Just keeps on going and going, like the Energizer Bunny. It keeps going and going and whatever. You know what I mean. All right, so we looked at the 1 year. We looked at the 90-day. We looked at the 30-day. We even looked at seasonality. And everything looked pretty damn good. So let's do the 200s and see what the 200s, sorry, the 202.50, see what they look like. Now, I do this every single night where I show you some sample companies and see what they look like and actually do a couple sample trades just for you to see how it works. I should back that up and start over because I didn't really explain what I was doing. I was just doing it. All right, first and foremost, normally, when you sign on, you're going to see these information on the stocks. Okay, the opening of the day, the high of the day, the low of the day, the close, the last price it traded at, what the bid is, what the ask is. That's just the information on the stock itself. Great. Well, once you own the stock, and then what do you do with it? Well, this here is the options. Your call options over here, your put options over here. Now, I'm not going to talk about the put options because the strategy I'm about to show you was created for my 9-year-old little daughter, and it was hard enough to keep her concentrated on the call options because they're simple, they're easy to understand. So, we're going to be dealing with just the call options. So the current price is 202.93. So I'm going to buy the stock at the moment at 202.93, and then I'm going to sell the 202.50. So if I'm buying it at 202.93 and I sell it for 202.50, aren't I losing money? It's a valid question because on the surface that's what it looks like. There's one very interesting part of the equation that you're missing. Yes, the current price is 202.93. If I buy it tomorrow at 202.93 and I'm selling it at 202.50, right there, the 202.50, I'm bringing in $2.65. So in essence, if you add them together, I'm selling it at 202.50. But for that privilege, someone is paying me $2.65. Look at it this way. It's kind of like you're standing in line to get a concert ticket or something, and someone says, hey, let me give you $50 if I can sneak in line in front of you. It's kind of like that, but not as frowned upon. Kind of. Okay, basically, I'm buying it for this price. I'm selling it for this price. It's almost the exact same. And I'm collecting this premium over here. That is over the 1% that I'm looking for. Because it's these over here, call options and put options, are actually insurance policies. They were originally intended as insurance policies for rich people not to have to lose money on their stock portfolio. Because if you thought something was going to happen, in the stock market, you would buy a put contract. And if the stocks did go down, well, the value of the put would go up, so you wouldn't lose any money except for the money that you paid for the insurance policy. So that's what we're doing over here. But we're doing it a little bit different. We're using it as an insurance policy for ourselves because I want to get a guaranteed price at a certain time and a certain date. So that guarantee is I'm guaranteed $2.05. Sorry, $202.50. So that's my contract. I'm getting 202.50. Okay? And for that, the premium I'm collecting is $265. So if you do all the math together, I am walking away with over 1%. All right, so that being said, let's take a look at what that would go for. Now, first thing I want to do is I want to change this right here. I want to change it to a covered call, because a covered call, I'm buying the stock and selling the option at the exact same time. So to do that, it's already preset of what it is I want to do. Now I want to do the 202.50s right there. There it is. And it already has the order preset for me. All I have to do is figure out how many contracts I want to do. And we're going to get into the rate of returns in a minute. So to make it easy, I'm going to just do one contract. And then you guys decide, well, at that price, I can do 5 contracts. I can do 30 contracts. And we all have a different amount of money, so we all have a different, ooh, I could do that type scenario. Angela, how you doing? Kelly? Slick Mick, good evening. No. Sasha, good evening. Holly, Caleb, Dennis. All right, so I'm going to change this to just one contract. That way you can figure out how many you could do. All right, so here it is. This is the order, and I always tell people, always read it out loud, because sometimes your little fingers may hit the wrong button. And yes, most people, almost everybody, has a story about hitting the wrong button at some point. Don't think you're that special that you're not going to do it, because we all do it. Everybody at some point in time hits the wrong button. So that being said, read it out loud so you can hear what it is. So seeing it, hearing it, and actually keying it in, it's just a little safety precaution. But I do give you one bit of advice. If you ever find you hit the wrong button, you pick up that phone, immediately call your broker and say, can you help me? I hit the wrong button by accident. And they will give you a grace period of a minute to 2 or 3 minutes. And that's about it. If you wait 2 or 3 minutes, then they won't do it for you. And if you do it consistently, they won't do it for you. But people make mistakes, and they understand that. If you can call in fast enough, they will reverse it for you. And that's very important information to know, because we all do it. We all hit the wrong button at some point. Okay, so let's take a look. Here it is. By one covered call against Apple, AAPL 100, that is the weekly. It's actually describing the whole order. 6 June 25. Well, that's this coming Friday. We're going to talk about the numbers here in a second. The 202.50 call option against the stock to open to open. Now, to open basically means we're doing 2 trades. We're opening 1 trade and we're opening a second trade. So the first trade is I'm buying 100 shares of Apple. The second trade is I'm selling somebody the right to buy my 100 shares of Apple at a certain price by a certain date. Well, if I'm paying 202.95 and I'm selling it for 202.50, I'm collecting $224 per contract. Each contract's costing me 20 grand. Well, how much is that rate of return? Well, let's find out. Get my calculator. Before you get squeamish about the numbers, let me explain a few things in a second or two. Let's clear this as soon as we find out what the rate of return is going to be. So if my profit is right here, max profit 224, that's my max profit. To find out the rate of return, well, you divide the profit by the cost of the asset, and that will give you the rate of return. Now, we're doing this on a weekly basis. So that means if I get 1% this week, I want to get 1% next week, the week after, the week after, the week after. Okay, I got nothing better to do. I'm retired. 10 to 15 minutes in the morning, I take a look at my money and I just rearrange it. What did I buy it for? What did I sell? What did I collect? Where is it now? What does that mean? Do I let it expire? Do I roll it forward? Everything is always about the numbers. This is probably why you should have paid attention in algebra class. Yes, you. And you. Anyway, so 224 is my profit. Right there. And I'm going to divide it by what it cost for the trade. Okay, divided by 20,000 and $20,028. Gives me a grand total of 1.1%. Okay, now, don't get me wrong, 1.1% is not bad for 3 days. Well, let me explain the 3 days. Now, I'm selling options. Basically, I'm selling time. But that's basically what it is. Because I'm buying it on a Monday and I'm selling it on a Monday. And on Friday, that contract expires. You ever go to a store and it says open 9 to 5? Well, this is kind of the same thing, okay? But my 9 to 5 sign says Monday 9:30 a.m., Friday at 3:59 p.m. That's it. You have that amount of time to do your shopping. Thank you, thank you, Kmart shoppers, for stopping at Kmart. Anyway, so you have this amount of time to do whatever you want to do. Now, everybody's different. I do most of my buying and selling on Monday or Tuesday. And the reason being, it's very simple. You ready? If I'm doing this every Monday through Friday, okay, and it's a weekly option, which means I sell it Monday morning, and then I hope it expires by Friday afternoon. Well, that's 5 days of time value. So Monday morning, 9:30 when the market opens to 3:59 p.m. Friday afternoon, that's 5 days. So you have 5 days. So if you take pure math, okay, 5 days, that's 20%, 20%, 20%, 20%, 20%. That's 100%. That's the whole week, Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so in this little scenario this week, today's Tuesday, which means tomorrow is Wednesday. I have 3 days left. There's something missing there. Okay? The other 2 days, Monday and Tuesday. So if Monday, Tuesday, Wednesday, Thursday, Friday is 100% of time value, well, Monday's gone. That's 20% down the tubes. Tuesday's gone. You just lost 40% profit potential to jump in on a Wednesday. That's why I jump in on a Monday. All right, so anyway, the thing is, on a Wednesday, sometimes it's better to not trade this week's, where it says 6 June 2025. It might be better to do next week's 13 June 2025, because it gives us an extra week, an extra time value. Well, here it's 1.1. All right, so let's see what it looks like for next week. And June 13th, right there, simple. Everything else stays the same, it's just changing the date. Okay, now I'll look at this. Okay, so it was 1.1% if we did this week's option. Now, if we do next week's option, we're bringing in 423. Okay, so that's almost twice as much. Okay, so this week, remember this week we're bringing in 224. Well, for next week, we're bringing in 423. So let's put that in the calculator. 423 and divided by, what is it going to cost us? Well, now the price is $19,827 because the numbers change because the market's still open. So look at that. This one says 2.1%. So here's where you make the choice. Do you jump in and do this week's and pick up 1.1% and hold off until Monday to do it again just in case? Pick up another 1 or 1.2% on Monday, or just say the hell with it and just go for next Fridays and pick up 2.1%. So it's 1.1 for this week, 2.1 for next week. So that's the decision you got to make in this scenario. And of course, it always comes back to the major question on the table at the moment is, do I even like Apple this week at this price? And am I willing to do a covered call every week for the rest of my life to get a nice 50% per year on Apple computer? Don't know. That's a question you need to ask yourself. But it looks pretty good. All right, next on the list. Oh, Matt. You saw my post about that. Interesting. Okay. Do you short? I'm lost. No, Travis, I don't. What are we talking about? Dominic, we're talking about investing in dividend stocks for weekly cash flow using a simple, safe, predictable, consistent 1% per week strategy. JJ, how do you feel about loving ODTE calls or puts for scalping intraday? JJ, I don't do that. I have other things to do with my time other than sit in front of the computer. Mark, on your website, I see that you rarely get exercise week after week, even though you sell covered calls close to the money. You roll over every often, is that correct? Mark, I will roll over every single week if a stock's going to consistently give me 1% or more. Because my goal is not to buy the stock, to own the stock itself. My goal is to buy a company that is consistently profitable, that will help me reach my goal of 1% every single week. So we were doing some checking, and yeah, Kohl's I bought last year, a year ago. I've never held on anything longer than 9 months. Well, Kohl's just beat that, a year. I've held on to Kohl's for a year, but Kohl's is giving me 1% every single week. So why the hell would I get rid of it? Think about it. If I buy a company, a stock, and it gives me a 50% return or more every single year, why would I get rid of it? It just doesn't make sense. All right. Enron CRWD is up 200% for me. I love investing. Enron, way to go. Baree, what's happening, Baree? Interesting name. Isabel, how are you, Isabel? So let's keep on keeping on. So I hope that made sense. Travis said hi. Hi, Travis. Travis asked about selling puts versus calls, same thing. Basically, Travis, it is the same thing, because whether you do covered calls or cash secured puts, it's basically the exact same. You're taking a big chunk of your money, you're putting it aside as collateral, and then you're getting a return on that money. Now, the question I would have for you, are you doing that on a weekly basis or a monthly basis or every couple of months? I don't know. Okay, Mike. Thank you, Mike. Jimmy Twax. Okay, interesting. All right. Who cares about price? We see price range. Absolutely. I love this one. Travis says, are you not listening? Yeah, I'm listening. All right, Star Group Incorporated, subscribe, blah, blah, blah. George Samuel, West Wentworth. Okay. Looking at charts tells you nothing about the company. Thank you, Samuel. Google Samuel West Networth. Gotta love it. Ocean Moshi. Back again, taking notes this time. That's a good idea. What's your favorite anti-ship missile? Oh, Calvin, thank you. That's an interesting question. How do you make money? I don't understand how it works. Elber, you're new here. Sit back, relax, just watch. If it makes sense, great. If it don't make sense, you're really not wasting anything. Just a few minutes, a couple of brain cells maybe. It's not that difficult. It was created for a 9-year-old. Making your money on the option. Absolutely, Ghost. Teach me the game. Damien, how are you today? My problem is the trying to read the charts properly. Oh, my, Damien. Hold that thought. Now, you can read the charts however you want. Let me show you how I teach how to read a chart. You're going to find it a little silly, because basically it is silly. All right, Dominic, you ready? Or Damien, sorry, Damien. Okay, Damien, you ready for this? How to read charts 101, 5 simple steps. You ready? Now, anytime I look at a chart, regardless what chart it is, I don't care what the time frame is, I don't care what the dollar is. I'm looking for 5 things and only 5 things. 1, the high, right there. 2, the low, right here. 3, where was it at the beginning? Right there. 4, where is it now? Right here. And then 5, connect the dots. Up, sideways, up, down, up, sideways. It's really not that difficult. Now, if you want to get in a little bit deeper, hold that thought. Let's zoom in really close. Okay. These are basic candlesticks. You got two. Okay, green and red. You got a white. White's called a doji, where it opens and closes at the same price. See, it opened and closed at the same price. Okay, so these are called candles. And the reason they're called candles because they look like candles. The body of the candle, the wick. Well, these candles have a double wick, one at the top, one at the bottom. Okay, this one has one, but it's really small. So there's 5 numbers. You can see a lot of 5s. I do a lot of simple things. I like to make things as easy as possible. So if everything has 5 to it, we have 5 numbers we're looking for on a candle. So looking at one candle, there's 5 numbers to take away. Okay? So the top of the candle, the top of the wick, is the high price just for the day. The bottom of the wick is the low price of the day. And then you have the horizontal line, one at the top, one at the bottom, both on the red and the green, have the horizontal lines. On a green day, the opening price of the day is the bottom horizontal line. The closing price would be the top horizontal line, also known as an up day. Started here and it went up. That's an up day. Now, 5, the 5th number we're looking for, is the range from the top of the wick to the bottom of the wick. How much range is that? I'll give you a quick little example. Okay? This day right here. Okay? Number 1, the opening price of the day. Right here, where it's O, opening. 225.02. Number 2, the high price of the day, 228.87. Number 3, the closing price of the day, 228.22. Number 4, the low price of the day, 225. Number 5, the range, the distance between the high and the low, $3.87. That's how much the stock moved just this day. Now on a red line, a red chart, a red candle, it's the same thing. The top of the wick is the high, bottom of the wick is the low. The top horizontal line is the starting point of the day, the opening. And she went down, down day. So the bottom horizontal line is the closing price of the day. So it's 5 numbers. The opening, the close, the high, the low, and the range. That's what you get from reading a candle. Also, reading a candle, depending on the time frame you're using, it's really irrelevant to think about it. This is one whole year. You can take your finger and go like this. Up, down, 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 all day long. Oh, you can just do it the simple way. Up, sideways, up, down, up, sideways. It's simplified, it's quick, it's easy, it shows you where you're going. And the reason why I'm looking at that on a 1-year chart is I'm looking for 5 things. But mainly, those 5 things are going to tell me, yes, it is a possibility for this week. Let's move to the next step. Because I do everything in steps. Step number 1 is assemble your stocks. Which stocks do I like? Great. Number 2 is then isolate which ones I'm going to look at this week. Because I don't look at all of them. I only look at the ones that are on the list for the week. That's it. Okay, there's 13 weeks in every quarter. Okay, first quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Each quarter has 13 weeks. So think about it. Week number 1 of the first quarter looks exactly like week number 1 of the second quarter, which coincidentally looks extremely similar to week number 1 of the third quarter and the fourth quarter. They're all the same. Week 2 of the first quarter in January is the same as week 2 in the fourth quarter in October. They're all basically the same. Just it's like a revolving door. Okay, and I look at each stock. I look at about 300. That's about it every 13 weeks. The funny thing is, at 13 weeks, so each week I'm looking at about 10 to 20 stocks every single week, and that's all I look at. I don't look at all of them because they all aren't up for consideration for that week. Now, what does that mean? Well, a stock has it. Well, let me pull this up for you so you get a better understanding. Better understanding, because every once in a while I get carried away and I lose track of things. This right here, well, that's called a calendar. This specifically is an EX dividend calendar. What does it mean? Well, each one of these little green dots represents a company that has 25 years of increased profitability. Remember, I told you what I'm looking for? Companies consistently profitable. Well, this is the month of June. These are all the companies that have a dividend this month from this particular list. Now, I have like 5 lists I work with, but this particular list, you probably heard of a lot of them. Okay, let's go over just a few of them. Pepsi, Coca-Cola, Chubb, T. Rowe Price, Albemarle, Ben Franklin Financial, MDT Medtronics, Cardinal Health, Cincinnati Financial, Illinois Tool Works, McDonald's, Stanley Black & Decker, Pepsi, General Parts Corporation. See, you may have heard of a lot of those. Kimberly-Clark, forgot about that one. Now, most of the companies I look at have 20 or more years of increased profitability. So I throw them into the calendar. So which ones am I looking at this week? That's basically it. Which ones am I looking at this week? Look at this. 4, 5, 6, 7, 8, 9, 10. 10, just 10 companies the first week of June on this list. But every single one of them has increased its profits for more than 25 years just to be on this list. Okay, so anyway, what I was talking about, stocks have a tendency to move or go up in value just before this little green dot, the EX date. Now, when it comes to a dividend stock, there's 4 dates you need to remember. Date number 1 is the announcement date. Date number 1. It's like, hey, this is James from Dividend Stock Talk. This is how much money we made this year. Amazing year. And this is the dividend you're going to get. Stay tuned. You're going to get it on this day. And this is what you're going to. It's the announcement date. Date number 1, they tell you how much they made and how you are going to be compensated as a part owner in the company. Because when you buy the stocks in a company, you are part owner. I like to look at it as you are the owner of your own cash flow machine. Okay, so if we're looking at Cincinnati Financial and I put in, let's say, 500 shares, that's 5 contracts worth. Well, how much is that going to give me every single week? Because Cincinnati Financial, every single week I can get a rate of return. And if I'm getting 1% every single week, that's over 50% at the end of the year. And that's what I'm looking for. So I take all the stocks I like, I stick them in the calendar, and the calendar tells me when I am buying or when I am looking at that stock. And then I look at the same things. 5 things on the chart: high, low, was, is, what's the direction? Great. If it's in the right direction, great. What strategy am I using? I'm using the covered call. It's simple, it's safe, it's predictable, and it's consistent. Okay, this was created for a 9-year-old. In 2008, my 9-year-old said, "Daddy, what are you doing? Can you teach me?" Now, that's not something a typical 9-year-old asks their dad, especially a 9-year-old little girl. You know, I wasn't baking a cake. You know, I wasn't making cookies. I was trading stocks in the stock market. "Daddy, what are you doing? Can you teach me?" I wasn't ready for that. So I had to come up with a strategy specifically for her. It had to be simple, it had to be safe, predictable, consistent, and no way for her to lose. So I came up with a strategy specifically for her. You ready? 5 rules. Rule number 1, if it's not on the list, it's a no. Plain and simple. Because in order to make the list, you had to be consistently profitable in weekly options. That's the only two criteria any stock has to have in order to make the monthly list. That's it. Two criteria. Consistent profitability, means 2 decades of increased dividends. Okay, that's the minimum. And then weekly options. Because the only way I'm going to make weekly cash flow is by something that trades weekly, the weekly options, or sitting in front of the computer all day. That ain't going to happen. Okay? So, simple, safe, predictable, consistent. You get a list of stocks, great. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Those 5 lists right there will give you 300 different companies that fit that criteria. Consistently profitable, weekly option. Great. Now we have 300 companies to play with. Well, 300 companies in 22 trading days in a month. So 3 months is 66. That's 66 trading days to look at 300 companies. Well, guess what happens after that? You get to do it all over again. This is boring as hell. It is monotonous. It is kind of like color by numbers. Do you remember color by numbers? Okay, number 1 was light blue. Number 3 was dark green, blah, 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 whatever. That's all it is. Boring, tedious, monotonous, but it works. Okay, 5 or 10 minutes a week. 5 or 10 minutes a day is less than an hour a week. An hour a week for 1%, depending on how big your account is. Now, you can't get to $1 million account until you start out with a $50,000 account or a $20,000 account. And then you got to go to a $100,000. Then you go to 300. Then you go to 500, 800. Then you get up to the millions. Okay, everybody's got to start from somewhere, except those few lucky bastards who got born with a trust fund. And then what the hell are you doing here? Let's keep on keeping on. So that being said, let's go back and start looking at some stuff. How much is the Discord? Ruben, the Discord is part of the morning trading group. It all comes together. How we do everything. You're actually invited to all the trading. You actually watch over my shoulder as I trade physically every day. Monday, Tuesday, Wednesday, Thursday, and Friday. Yeah, baby's in the house. What's happening, dude? Gee, money. Don't think he's rocking a Discord. Actually, I do have a Discord. Okay? But the Discord is part of the paid service. So I do have a paid service. Okay? But I'm not asking anyone to buy anything. All right, let's keep on going. Keep on keeping on. All right. So what questions do we have over here? Okay. My problem is trying to read the charts properly. Damien, hope you got that okay. That's the beauty of his strategy. Price really doesn't matter. I still don't understand. Uh-oh. Albert, I'm not quite sure what it is you don't understand. Let me see if I can simplify it for you. Let's get out of here. Let's go to there. Let's go to here. Let's go to here, and let's go to here. All right. Albert, let's see if I can explain this to you in a manner in what you might understand. Okay? So, let's say, hypothetically speaking, all right? Hypothetically speaking, Albert, you go to the part of town, and there's a nice, beautiful home, 3-bedroom, 2-bath house, 2-car garage, a swimming pool on the back, and it's going for $200,000. Okay, it's going for $200,000. So you think to yourself, okay, $200,000. What kind of cash flow am I going to get from this? So let's say hypothetically you get $2,000 a month. So your house just happens to be on Apple Street. Is that a coincidence? Look at this. We're looking at Apple. Okay. Happens to be on Apple Street. It costs $203,000. Oh, look at that. It's $203,000. So hypothetically speaking, every single month you get $2,000 a month. Great. What rate of return is that? Same thing. But here, instead of buying the house, you're buying $200,000 worth of Apple stock. Well, $200,000, let's say, gets you 100 contracts. So what does that give you every single month? See, the difference between real estate and stocks is some stocks you can do monthly, just like real estate. Some stocks you can do weekly, unlike real estate. But it's basically the same thing because you're buying an asset, okay? Apple stock, okay? The house on Apple Street, however you want to look at it. You're putting money out there. You're buying a house. Great. You're getting a return every single month. At the end of the year, your house goes up in value, goes down in value, goes up in value, goes down in value. The exact same thing with the stock market. You put 200,000 into Apple, great. Now that 200,000, well, this week it's worth 205,000. Next week it's worth 207,000. 3 weeks from now it's worth 180,000. But you don't sell it because it doesn't make sense, because it's bringing you in cash flow every month. Well, my little stock on Apple Street is giving me a rate of return every single week. And yeah, the value goes up and down, up and down, up and down, but it's just like a house. You buy the house, that is the price you pay, $203,000. Well, $203,000 worth of stock is the price you pay. Now, the value of your house goes up and down. The value of your stock goes up and down. But the people renting the house, it doesn't really matter what happens to the value of the house. They're still paying X amount every single week. Well, sorry, every single month. But on the stocks, the value goes up and down, up and down, up and down. It's your responsibility to take where the stock is now, sell a covered call to a place where it makes sense but doesn't put you at risk. And there's a balance there. Some weeks you're going to make more, some weeks you're going to make less. It's all part of the game, but it's all the same game. You're putting money aside, whether you're buying a house on Apple Street for 200,000 or whether you're buying, 100 shares of Apple at $200 a piece, 200,000. It's still 200,000 and you're still getting a rate of return for it. Just so happens that real estate, there's a little bit more risk to it. And also, there's a lot more attention and maintenance you have to do to it. And you can't buy it and sell it. Well, you kind of can, but not realistically. If you're living on, let's say you're on a beach in Bali. You can't just go in there and buy that house on Main Street. There's a lot got to go on. But a company stock, yeah, you can. You can buy it when the right time is right and just keep selling covered calls every single week. Now, I've had calls for a year. That's the longest I've ever held anything. And I didn't hold it on purpose. They just so happen to give me 1% every single week for the last year. That's a 50% return on my Kohl stock, even though Kohl's has gone down. Well, that's the beauty of the covered call. You can change the numbers every single week to best suit whatever type of trading strategy or whatever type of risk factors that you have. I mean, if you shoot from the hip, hey, let's see where it lands, great. Well, if you're like me, you want it to be predictable and you want it to be safe. I'm 61. I have no desire whatsoever to go back into the workforce. Okay? None whatsoever. So if I make 1% every single week, which I have been for about 15 years, then I don't have to go back to work. That works for me. So I'm just here to share the wealth. Actually, I'm creating a video log for my children and my grandchildren. So hopefully, when I'm long gone, this is part of my evil plan. I'm going to spend the next 10, 15, 20 years creating a financial empire for my children and my grandchildren and all my offspring. But the catch is, they ain't getting any Papa G's money until they can prove that they are worthy of it, which means, can they consistently get a return for whatever money that's allocated towards them? Aristocrat stocks, money 24/7. How are you doing this evening? All right, Mel K73. Interesting question, and I get that question a lot. Let me repeat it for the rest of you. What are a few of your favorite high-yielding dividend stocks? Now, Mel, that's a question that so many people ask. And I'm going to say, I have no clue. The reason I have no clue, I don't categorize the stocks by the yield in which they pay out. I categorize the stocks on the consistency of profitability. Okay? I don't care if you have a 5% yield or a 20% yield. If you're consistently profitable and your stocks move like all stocks move, I'll invest in it. Is it consistently profitable? That's all I care about. I'm not looking for the yield, because the dividend yield is, are you going to hold it all year long and not get dividends from, not get weekly premiums. So I have a totally different way of investing. Will I get dividends? Yeah, not that I'm looking for them. I'm looking for them in a manner of their consistency of increasing. If they continuously increase, that means the company's continuously profitable, because you can't give out more money if you don't have more money coming in. It's just common sense and logic. I think that's what it is. I remember those three. Common sense, logic, and reason. Yes. Okay, if the company's more profitable and they share profits, well, the profits are going to be higher. Okay? It's just plain and simple. That's all there is to it. So if somebody wants to take a look at CRWD. I can tell you no right now, only because I don't think CRWD. Yeah, a couple of reasons. Reason number one is at the high of the year. It should take you 3 to 4 seconds to size up or to take a look at and dissect a chart. Okay? Every picture, I think it was Rod Stewart back in the 70s, every picture tells a story, don't it? Rod Stewart song. High, low, where was it? Where is it? Look at the motion. Up, down, up. Well, logic tells you where's it going next. I never ever buy anything at the high. The high is the time to sell, not the time to buy. When's the last time you heard anyone said, hey, CRWD's at the high of the year. Let's buy some and see how high it will go. No. Why? What? Because the people who bought it down here at 300, they're looking at $188 profit per share. 300, now it's up to 488. Yeah, they're going to be jumping and bailing sooner or later, because it can't go up forever without someone taking profits. Because that's why we're here. We're here to make profits. If you bought it last year at 200, well, now it's almost at 500. That's a nice increase. At what point do you take your profits? I take my profits every week, because I'm not looking for capital growth. Capital growth is where you buy it down here and you wait and you wait and you wait and you wait and you wait. Yeah, while you're waiting, you're also working a 40, 50, 60-hour work week. Not me. No thanks. I'll buy it when it's low, sell it when it moves up. Now, I'm not looking for a big move. Remember, I'm only looking for 1% a week. I don't really care about big moves. All right. What are we looking at? Big Daddy's in the house. Trend plan trading. Ooh, I'd like to have a chat with you, dude. Drop me a number. I'll give you a call. We'll have a chat. The Wizard King. Good evening, good evening. Matt Will 33. Okay, Money wants to take a look at US Steel. Ben, can you show us how? Ben, I've been showing you. Let's look at another one and see if it makes sense. US Steel. I actually own a bunch of US Steel. All right, well, here we are. Let's take a gander. Are we ready? Here's the high. Here's the low. Here's where it was. Here's where it is. Look at it. Basically just going sideways the whole year. Basically, a little dip here and a little bump up there. Other than that, just basically going sideways. So a year ago, we're at 37. We bottomed out at 27. Topped out at 54. Well, look at this move right here. So I'm in it at 41, which is here. And it made this big jump. Okay, so I'm at the tail end of my profit ladder. Because I bought it at 41. It jumped up. I say let it go. But the funny thing is, as I try to roll it forward every week, it keeps giving me more money. So why would I let it go? This doesn't make sense. All right, so let's take a look. Now, it's not a good time to buy US Steel, only because It's at a new high, this area here. It's not someplace I want to be. Now, I don't mind staying here because each time I roll it forward, I get a new chunk of money. Fine. At some point, it's going to stop being profitable. And at that point, I'll just let it go. It's always going to be about the numbers. What did I buy it for? What did I sell it at? What premium did I bring in? Can I make more by holding on to it or cashing out and just getting something else? Now, don't get me wrong. I love US Steel. Okay, but think about it. It was 40 bucks 2 weeks ago. Now it's at 53. Now you do realize the distance between 40 and 53 is a 25% increase. So ask yourself a question. If you bought something and then a week later it jumped up 25%, would you take that profit? Now that's a simple question. It's either yes, I'd take the profit, or no, I'm an idiot, I wouldn't take the profit. Sorry to be so blunt, but think about it. It was down here at 40, jumped up to 53. If you don't think in another week or two it's going to be back down here at 40, you're not paying attention to the game. Because when she jumps up, people are going to take their profits. And when people start taking profits, the stocks come back down again. And when stocks come back down again, then it makes it more affordable, and then I will jump back in. See, I have no problems. I got it here. Get rid of it here. Great. When it comes back down again, I'll jump into it again. Because I like US Steel. Okay? Next. So we're going to say no to US Steel for this week because the numbers just don't look that good. All right. What are we looking at? Okay, Glenn, I don't do puts. Now, I do puts, but I don't share what I do here. And there's a reason for that. Okay, hold on a second. Did you double up when it was at 27 a share? Were you talking about US Steel? No, I jumped in at US Steel at 41 a couple of weeks ago. Okay. So Glenn, as I was about to say, Glenn Bryan, I don't discuss any other trading strategies that I do except for the one that I'm giving away for free. Okay, it's a simple, safe, predictable, consistent 1% per week strategy. And if you perfect that one strategy, remember it was created for a 9-year-old. Okay, most of you are over the age of 18. You should go, oh, no brainer, simple. 9-year-old can do it, I can do it. So once you perfect that, yeah, there's other strategies I do, but this is the only way I give away for free. So you adverse 22% of your investments year over year on average. How the hell do you come up with 22%? If I get 1% every single week, 1% every single week is 52% simple interest. It's like 64 compounded. So I'm not quite sure where you're getting the 22% on your investments year over year on average. No, last year I made 63%. This year I'm already up 40% and we're not even halfway through the year yet. Okay, I show every single trade that I make, the winners and the losers. I just so happen to only have 3 losers. I had 2 as of last week, but this week I lost again because I wasn't paying attention. Not that I hit the wrong button. I wasn't paying attention. Okay, Damien, blah, blah, blah. Damien Potton, he has another live with just a screen. Yep, that's correct. Damien, I bought a call on Ford. Wave contra lost 88%. Didn't put in a stop loss. Well, Damien, I don't buy calls. I sell them. So my math is not mathing. Blue Razor. Hold on. You guys going quick here. So you average 22% on your investment year over year on average. Yeah, your math is not mathing at all. Let's take a look at a company. Not Hewlett Packard. Let's take a look at Humana. Ooh, Humana. Okay, so Blue Razor. Uh-oh, that didn't work. How come that didn't work? All right, now it worked. Okay, Blue Razor, I'm going to show you a couple of trades. Okay, now I do this every single night, okay, except for Friday nights and Saturday nights. Now, it's a simple trading strategy, all right? So I'm going to show you a stock that we looked at Monday or Sunday night. Well, it sounds like I need to start paying attention. Maybe. All right. So let me show you a stock that we came up with this beginning of the week. Now, every week, we're starting a new trend. Every week, we're going to pick 5 or 6 stocks and follow them through the week. So far this week, we found Ford, 2.48, Apple, 2%, UAL, United Airlines, 3.3, CVS, 1.7, and Humana. Okay, so those are the, wait a minute, and Best Buy, Tech, and Apple. I already said Apple. Okay, so that's the 6 stocks that we found, that we've been following just this week. Okay, so let me show you one of those and see if we can get your math to start working, all right? So we said Humana, H-U-M, perfect, gotta love it. Looks good, okay? You ready? Here we go. Follow along slowly, okay, Razor? The high of the year, just over 400. The low of the year, just under 220. That's almost a 50% drop, almost. Now, I'm looking for 5 things. The high, right there. The low, right there. Where was it? Right there. Where is it? Right there. And then just take your little finger and do this. Up, down, sideways, down, up. That's simplified. Okay? It's not at the bottom. It's not at the top. It's somewhere in the middle. Great. Let's move on and see what it's paying. At 235.77, the 235s are going for 430. 430 a share. So if I buy something for 235, I sell it for 235, and for the privilege of leaving that price right where it is between now and this coming Friday, someone is going to pay me $4.30 per share. Okay, so it's kind of like buying a house. If I'm buying a house for $235,000, okay, someone's going to buy it from me at $235,000. It's called an option. For that, they're going to give me $430. Hopefully, it's making sense. I don't know. Let's check it out. A year ago, we're at 362. Top of the year is right now 408. Bottom of the year, 210. Let's look at the last 90 days. Okay, last 90 days, same thing. High, low, was, is. Look at the motion. Down, up, down, up. Not that difficult to spot it, even in 90 days. Now, what I'm looking for on a 90 days is just a little bit different than the year. Because the year chart, I want to get a good idea of what the motion of the flow is going. Okay? Down, up, down, up. That's how I want the motion. So where's it going now? Well, it looks like bottom's here. Now she's going back up again. But that's a 90-day chart. I'm looking for patterns. Look at the spacing between the movements. About 2 weeks to go down, 2 weeks to go up, 2 weeks to go down, 2 weeks to go up. Same thing. It's just follow the flow. What are my fellow investors doing? What is their buying and selling pattern over the last 3 months? Okay, now I want to jump in and take a look at the last 30 days, because the last 30 days gives me a really good idea of where do I think it's going next. Okay, 30 days ago was a 30-day high, 260. She drops all the way down to 213. Well, that's a big drop. And then she jumped back up again. And then she dropped back down again. Now she's going up a little slower. So she's definitely in an upward trend. Well, great. Now, just knowing that the company's consistently profitable, they got the dividends. Well, now what are we making at 332. So we're going to look at the 335s. So I'm going to buy this one contract. So let's take a look. One contract at the market and confirm and send. All right, so here's what the order looks like. Buy one covered call Humana, HUM, 6 June 25. That means the option is going to expire on this Friday. The $235 call option against the Humana stock at the market to open. So that means it's going to open up first thing in the morning and it's going to do 2 trades for me right off the bat. The first one, it's going to buy 100 shares of Humana. The second one, it's going to sell somebody the option, the right to buy it from me. Hold on a second, I got to plug this phone in. Okay, here we go. Okay. So I'm going to sell somebody the option to buy it from me for the same price I paid for it. Okay, and for that privilege, they're paying me this amount of money, $603 per contract. So every contract that I have, I'm receiving $600 for it this week. Okay, so think of it this way. I'm buying a house for $22,000. And what am I getting? I'm getting a weekly cash flow or a weekly rental at $600. Well, what is that? Right, what's the rate of return? Well, let's take a look. Calculator, clear that out of there. Now the profit right there, 603. Now, remember what I say? I want a simple, safe, predictable, consistent return. Well, when I say predictable, I know exactly what I'm going to make before I even dish out a penny. Because a covered call tells you exactly what the trade looks like. The parameters are defined. I'm buying it at that price, at the market open. I'm selling somebody the rights to buy it from me. I'm collecting that. So it locks up those shares until Friday afternoon or whenever they decided, say, hey, I'm ready to pick up my stuff. They can do it anytime they want. They can do it tomorrow afternoon before the market closes. They can do it Thursday. They can do it on Friday. Anytime they want, they can do that. Scotty Cook, what's happening, Scotty? So what I want to do, I just want to sit back and watch it. Okay, and if it doesn't sell this week, if for some strange reason it's below the agreed upon price, it's like when you're buying something, you make a deal with the person selling it or you make a deal with the person you're buying it from. Okay, I want to buy it at this price and I want these are the terms, price terms. Well, on stocks, it's the same thing. Okay, what stays the exact same is the price that I pay for it. So if I'm paying whatever the hell the price is, $233, that's what I'm paying. That's my price. Now the negotiation starts. Who wants to buy it from me? Are you willing to give me this amount? Well, great. How much is that? So let's put it into the calculator, 603. 603, and I want to divide it by how much it cost me. That gives me the rate of return for the week. And I'm going to explain it. Hold on a second. So I'm going to divide it. I'm going to do this twice. And I'm going to explain to you why I'm doing this twice. So 603 is the maximum profit. And it's costing me $22,897. So that gives me a grand total of 2.6% for 1 week. 3 days, actually. Wednesday, Thursday, Friday. So 2.6, here's the numbers right there, 2.66% for 1 week. Now, here's the thing. After I bought the stocks, tomorrow morning, after I buy the stocks, they're mine to do whatever I want with. So I sell the option, great. Now that person has the opportunity to buy it from me at a certain price by a certain date. And this moment, that certain date is this coming Friday. So they got 3 days to make up their mind. Buy it, don't buy it. Okay? Your $600 is non-refundable. It's a non-refundable deposit. Good faith deposit, however you want to word it. But here's the thing. If by Friday it's below 235, well, whoever bought that option is not going to take the stocks away from me because it's not worth it to them. So I keep that 600 bucks and then I turn around and Monday I sell it to someone else. However, I now have to find out what is the value of it. What's the value of my house? Did my house go down in value? Did it go up in value? Well, remember, I bought it for what is it, 233, and I'm selling for 235. What do you do when the stock drops beyond profit? There's no such thing as beyond profit, Glenn. Now, what do I mean by that? Okay, let's say hypothetically you buy a house, you pay $200,000 for it. Okay, what happens if that house drops down to $150,000? Do you sell it at a loss, or do you let the people renting it stay there and continue to pay you rent? Same thing. Stop looking at the prices. What am I doing? Well, I'm buying 100 shares. 100 shares is one contract. Think of it that way. One house, one share. Okay, I can sell one covered call every week. So this week I can get 603, which is 2.6%, which is over 125% by the end of the year. Well, that's a nice rate of return. Am I going to get it every week? No, because next week the value may drop down to 200, and I might have to drop my rental rate a little bit to adjust. So every single week the numbers change. That's why I look at it every morning, because I want to know what it's doing. Okay? It's like having children. You got to feed them every day. You got to water them every day. You got to make sure they take a shower, get dressed, and provide for them every day. Well, it's the same thing with your money. If you don't keep an eye on it, you have no idea what it's going to do. So when you say, what do you do when your stock drops beyond a profit? Well, when you're saying that, I'm not quite understanding what you're saying, because the value goes up and down. You only lose money if you agree. Make that agreement with yourself. Hey, I bought this at 233. I'm going to sell it for less. Why the hell would you sell it for less? Okay, I got 5 simple rules. Rule number 1, if it's not on the list, it's a no. Rule number 2, never sell for a loss. Rule number 3, make sure the company's consistently profitable, which it wouldn't be on the list if it wasn't. Rule 4, weekly options only. And week 5, make sure the numbers work. Is it giving me 1% every week? Now, there's some great stocks out there that do not pay 1% every week. I think I bought Johnson & Johnson once in 20 years. It's a great company, but it's such a well-established company, the premiums aren't really 1% every week. They're less. So I have to go with other companies, like General Motors, or Ford, or Bank of America. All right? So when the stock drops, I just change the strike price of what I'm selling. Or if the value of the real estate drops, I change my rental rate. It's all basically the same. Okay, if the stock value goes down, the amount I'm bringing in every week decreases. But I never, ever, ever sell for a loss. It's not a loss. It's not a profit until you agree to take it. So if a stock goes up and you don't take that profit, it's not really a profit. Until you take it, it's really nothing. Okay, next. Wesley, good evening. Roxy, good evening. Lonnie, good evening. When the option doesn't make sense anymore. Well, when the option doesn't make sense anymore, Glenn, that's when you either change the expiration date or you change the strike price. You always have opportunities to do something. You can even dollar cost average down if you want. But a profit is not a profit until you take it. A loss is not a loss until you agree to sell it for less than when you paid for it. Now, people buy homes all the time. And homes go up in value and they go down in value. But you know what stays the same? The amount of money you get paid for it. Okay, so if it's a rental property, the amount of money you pay to the bank stays the same. The rental income usually stays the same. When times get good, well, you get a higher rental rate. When times are bad, you get a lower rental rate. It's the same with a stock. It's all perception and how you look at things. Context, that's a good way of looking at context. Roland, what's happening, Roland? All right. K-Swiss. So the price is not as important when you're doing options. K-Swiss, that is almost exactly what I said. Almost. Okay? So when you're buying 100 shares, whether you're buying 100 shares of Humana, whether you're buying 100 shares of Ford, General Motors, AT&T, IBM, Schlossberger, or whatever, whoever you're buying, does it make sense for you to buy that? Number two, are the options, let me get out of there. Okay, I wanted to show you another one. I'm going to show you another one in a second. Do the options that they have available, do they make sense? Are they profitable? Okay, so number one, never buy something you don't want to hold on to for a long period of time. Number two, never sell at a loss. Number three, make sure the company's consistently profitable. Dividend kings, aristocrats, champions, contenders, Warren Buffett's list. Those are all good quality companies. There's about 300 of them. So why the hell not? And if you can get 8%, even if it's 0.5%, 0.5% every single week is still 26% per year. Just do you have what it takes to do it every day? Because it's your money and nobody's going to do it for you. So do it yourself, don't do it yourself. You got a choice. It's weird that we here in America have a choice. I can do it myself, make a whole bunch more money, or I can rely on the kindness of somebody else, oh, by the way, who I am paying to do it for me. Okay? So, it all depends on what you want. More questions. What do we got? What do we got? What do we got? Roxy, can we look at Pepsi? Well, I was looking at it the last week. Yeah, Roxy, we've been watching it for the past couple weeks. I wanted to finish showing you something on this one first. So you keep selling calls at the price you paid. No, Glenn, the calls, they go up and they go down, up and down with the valuation. So in a good market, when everybody wants to move into your neighborhood, you can get higher rents. Well, when everybody wants to move out of your neighborhood and nobody wants to rent, well, then you get lower rents. It's basically the exact same. If you're buying an asset that gives you money on a weekly basis, you're going to have good weeks and you're going to have not so good weeks. The idea is to balance it out. Where's the best place for your money? Which pony is coming in this week? You ask any person who bets on horses, hey, which pony's coming in this week? Great. Well, I'm hitching my pony to Humana this week. Next week, I might hitch my pony to Ford or General Motors. All depends what the numbers look like. Because stocks do nothing else other than going up, going down. Going up, going down. That's all they do. Up, down, up, down, up, down. That's it. If you find a company that you like, fine, watch it. Become familiar with it. Okay, watch where the profits takes place and the stock starts to drop. At some point, and they're all the same, at some point, people are going to say, oh, hell yeah, Ford at $5, I'm buying a shitload. Every company's different, but they all have a rock bottom and they all have a top. It's like Ford at $20, oh, hell no. Okay, Apple at 1,000, nope. It's at 200 now. It ain't worth 1,000. If it was, that's where it would be. Let's keep progressing. Michelle, hello, hello, hello. New Jersey, I listen to you almost every day and I learn something new every day. Thank you. All right, Jersey, way to have it. So Roxy wants to take a look at Pepsi. Now we have been Pepsi. Wait a minute. Oh, K-Swiss, you understand that? K-Swiss says the rental property example helped out. Because think about it. People go and buy a house and they will pay all cash and spend $500,000 for a house to get a $3,000 income. Well, $500,000 would give you $5,000 a week, which is $20,000 a month, and there's no rent. There's no homeowners association. There's no curbside trash pickup. There's no mowing the lawn. There's no nothing. That's like no employees. no overhead, no inventory, but the returns can be weekly as opposed to monthly. I'm glad that worked out for you, K-Swiss. I'm going to use that a little bit more often because for some people, it makes sense. Okay, an asset, a cash producing asset. So we're going to change our focus. We're looking for cash producing assets. Great. If I buy a house for $200,000, it's going to give me $2,000 a month. Well, that's not a whole hell of a lot of money now, is it? So $200,000 should give you $2,000 a week, which is $800,000, which is $8,000 a month. It's all about the numbers. Where you plan to put your money is up to you. All right. Now, I told you I was going to give you two examples with Humana. All right. Now, we're going to do this again with Humana, but we're going to use a different number, and let me explain to you the different number. So the example I just showed you, okay, the maximum profit, 603, the cost of the trade, including commissions and fees, 22,800. Okay, it gave a rate of return for the week, for 3 days, 2.6% for 3 days. All right, so we're going to change it just a little bit. Okay, now some of you may understand this really quickly, some of you may not. Let me explain it slowly as I can. Now, when I gave you these numbers here, it was under the pretense of it being an all cash account, which is always the best thing to do when you're first starting, all cash account. Because if you do what is called a margin account, where you're borrowing someone else's money, then it becomes extremely risky, especially if you lose. Okay, now, I learned a little bit of a lesson earlier today with that, not today, but earlier this year with that DTS thing that happened. Okay, for those of you who don't know what DTS is, Trump derangement syndrome. He said tariffs, everybody panicked, stocks dropped. That gave me 2 margin calls. I got 7 accounts. I shared 3 of them publicly. Well, 2 of them got margin calls because I was over leveraged with margin. So I tell people, when you're first starting, do not use leverage. Do not use margin until you understand the risks. Now, every single one of my accounts are a margin account. But this year, because of the DTS crap, I have to leave a bigger cushion. So I have a bigger chunk of money sitting on the sidelines for the next DTS to cause the stocks to drop. So I don't get another margin call. But margin, let's take a look at what these numbers look like on margin. Now, margin is if I put in 10 grand, my broker will put in 10 grand. So now I have 20 grand to play with. That doesn't mean I have 20 grand. That means I have 10 of my own, and they're lending me 10 to help me capitalize on something, hoping that I'm wrong so that they make more money. They don't care. So this is a margin account. So let me show you what the return that I'm going to be getting if I do this. Now, if you have all cash, you're getting 2.6. Well, 2.6 every week is not bad. It's over 100% for the year. So let's take a look at what it would be on margin. Now, the profit's still the same, 603. That doesn't change, okay? But the cost of the stocks doesn't change either. It's still 22,897. However, on margin, half of that is not mine, half of it is. So how much of my money is in that? Well, half of my money is in this number right here. Buying power effect. So I can do this exact same trade and only put in 11,000. Okay, because half of that money is margin. Now, I don't suggest you doing this, but watch how the numbers change. So remember, it's 2.5 on cash. Let's see what it looks like on margin. Okay, divided by 11,226. That comes to a grand total of 5.37% on margin. Now, that's not going to be the exact amount I'm going to get because it's borrowed money. And borrowed money, well, I got to pay homage to the fiddler. You dance the music, you pay the fiddler. You borrow money, you got to pay interest. Same thing, okay? I'm borrowing someone else's money to trade with. That's what margin is. Okay? So if I put in 100 grand, they put in 100 grand. Now I have 200 grand to play with. If I'm right, I make $2 for each dollar of increase. If I'm wrong, I lose $2 for each dollar increase. So everything gets doubled. It's great when you're right. Well, it's great for me because I don't want to say I'm hardly ever wrong, but I always have in mind a plan to move it forward so that I don't lose. All right. He's doing the tariff nonsense again tomorrow. Is steel the pauses in July? Don't know. Okay, Thomas, how do you lose money on a covered call? Thomas, we discussed this last night and we discussed it earlier, and most people don't want to admit it. Okay? And you, Thomas, probably won't want to admit it either. Most people just starting out lose money by, are you ready, Thomas? Most people lose money by hitting the wrong button. Okay? Buying instead of selling, selling instead of buying. Selling 5 contracts instead of 50 contracts. Okay, so it's one of those things. But that's usually where people lose the most money. Okay, and by not sticking to the plan. The plan I have is simple. You buy a stock, you sell somebody the rights to buy it from you, you collect the premium, you move on to the next one. Okay, however, when a stock jumps up, people say, well, I don't want to lose my stock. Well, then you shouldn't be playing this game. Because on this field, this is what we do. We buy it, we make our profit. We said, great, we'll see you in a couple of weeks when you're better suited. Because right now, US Steel is high. I wouldn't buy it now. I wait a couple of weeks till it's back down again. Who knows when that's going to be? I might have to wait 3, 4, 5, 6 weeks to buy US Steel again. I don't mind. It's on my radar. I will look at it when the time comes. Elliot. People reacted to Trump isn't derangement, it's pragmatism. Okay. Now, I don't do politics. I'm just saying that when he said what do you call that? The tariff thing, people got scared, the stock market dumped, I got a margin call. Okay? When Trump says something and people react unrealistically, I mean, they made it sound like the world was going to end. Well, that was months ago, and the world is still going. Okay? Yeah, Seb, I just said that. I said the amount of money that I'm collecting, that's not 100% accurate. Okay? Because part of that, I do have to pay to use margin money. So when I say never borrow margin money until you understand it, so when you borrow it, you got to pay the fiddler. That's what I said, you got to pay the fiddler if you dance to the music. So if I'm borrowing the money from the market maker, I'm making 5.3% for the week. Well, part of that has to go to pay for the premium, not for the premium, for the interest on that borrowed money. Yes, OMG, this is making sense. Thank you, I'm glad you like it. Yeah, Seb, I get it. But think about it this way, Seb. Okay, the margin money that I'm paying for, I'm paying 6% a year to borrow. I think it's like 100 and something thousand in this particular account. So I'm borrowing 8%. That's $8,000 a year. I'm paying $8,000 a year to borrow $100,000. That's 8%. But if I'm making 50% per year, so 50% on 100,000 is 50,000. But if I'm paying 8%, I don't make 50,000. I only make 42. Oh, boo-hoo for me. So you're right. I do have to pay for the margin. I get that. Seb, margin will not break me in time. It will only break me in time if I'm not making enough money to pay for the margin. Okay, margin is 8% for me. Okay, so 8% is $8,000 a year. If I'm making 50% per year, that means I'm walking away with a free 42,000 from that. Taco. There's a stock named Taco. I didn't know that. What's the cost of your margin? My margin, I believe, is either 6% or 8%. But you know what, Glenn? I really, honestly, I really don't pay attention to how much the margin is. My main concern is the 1% every single week. Because if I'm making and I'm focusing single-mindedly on the 1% a week, that's 52% a year. So if I'm making 52% a year and I'm paying 8% for that money, well, I will do that all day long. As a matter of fact, if any of you guys want to lend me money, I'll pay you 20% to borrow your money. I mean, it's a 20% guarantee. I tell it to everybody, and they say, no, why is it 8%? Isn't that high? Well, Chris, no, it's not that high because it's borrowed money and I'm using it to trade with. Can you earn real AI and beyond? Now, I'm not quite sure what you're talking about. Okay, AI and beyond. Can you earn real? Well, I do earn every single week. Oh, nicotine enjoyer. 1% a week isn't 50% a year. I'm aware that's a lot more. If you had $1,000 to put in right now, where would you put it? Education. Nicotine. Buddy is not an option trader. Oh my goodness. Nicotine enjoyer. Ooh, I got something just for you. All right. I love it when people question me. I do. Because they say if you don't have enough haters, you're not doing a good job. So let's see what we have here. So, all righty, let's go to here. The 10-minute trader. So just for you, nicotine enjoyer, we're going to take a look at what I created, a weekly compound interest calculator. Okay, it's an interesting one because not only does it compound weekly, it also allows me to add money on a weekly basis. So we start out at the beginning where we just fill in the numbers. They're relatively simple. So in this case, let's put in $100. Okay, $100. Okay, now I have the opportunity for periodic deposits. What does that mean? Well, if I'm starting with just $100, I can, if I want to, add $5, $10, $100, $500 every single week or every single month. Okay, so I can add a certain amount every single week. So we're not going to add anything to it. We're just going to figure out exactly what the rate of return is for 1 year, compounded, without adding any more money at all. So we're not going to add any money at all. We're just going to compound for 1 year at 1% per week. 1% per week, weekly, yearly, okay, 1 year, okay? So everything you need is there. How much are we putting in? How much are we starting out with? Well, $100. Okay, 1%, we're going to compound it at 1% per week because that's what I'm showing you, 1% per week. So then the deposit frequency, if you wanted to, you could do it weekly, bi-weekly, or monthly. Okay, period deposit, doesn't matter. And then the time frame, I can do it monthly or I can do it yearly. So we're going to look at 1 year to see exactly what 1% per week equals in 52 weeks. Okay, so compute savings, there you go right there. Okay, so how much was totally invested? $100. What is left at the end of the year after 1 year? $167.77. So that is compounded. 1% every week. Compounded is 67.7% per year. Compounded. So you're right. 1% a week is not 50%. But if I told you I make over 67% per year compounded, well, then that would be unrealistic. Because I do make 50% per year because I got to take into consideration the 2%, the fees, and the fact that my money doesn't compound. Okay, so I spend most of the money I make on a weekly basis because I got bills to pay. But I like it what he says. Nicotine says I'm not an option trader. Thank you. You want to come challenge me? Be my guest, but you better have something good. Mr. Jam, good evening. Daniel Miller. It's way, way more. Yep, it is. I will lend you $100 grand at 20% all day long. Yeah, you say that. okay? But step up to the plate. I will guarantee you 20%. You give me 100 grand, I'll guarantee you 20% a year. How do you earn 1% a week turning dividends? Okay, so wait a second. Who was that? Apple V. Okay, Apple V, I'm not collecting dividends. I'm not looking to collect dividends. I only use the dividend as a precursor or a spotlight or a beacon or an indicator to tell me when to buy a certain stock, because stocks have a tendency to go up in value just before the EX dividend date. And knowing that bit of information will allow me to do a simple trade to capitalize on 1% every single week. Shark Trader, what's the 1% stock for this week? Oh, we already said that earlier. Ford, Apple, United Airlines, CVS, and Humana. Those are the 5 that we're looking at. Now, every Monday night, or actually it was Sunday night. So every Sunday night and Monday, we take a look at some stocks and we pick them for the week and see what they're doing. So this way, if you tune in every night, you'll see how that stock is progressing. So this week, like I said, we're looking at Ford, Apple, United Airlines, CVS, and Humana. And next week, we'll pick another 5 and see how they progress. Okay? If you put all the money to work. Okay, Glenn, I'm not quite sure what you're saying. Okay, Vegas Nights, we already looked at Apple. Ben Avila, Cool Beans, Glenn, can you look at Pepsi? We'll look at that in a second. Thank you. You're welcome, Kevin. Cool. All right. So as I was saying, 1% per week. Vegas Nights. Sorry, that's an old computer like 10 minutes ago. All right. Apple has a showcase next week. Might want to hold on to it for that 13th, I think. Comment, Glenn. Yeah, Glenn, I'm well aware I have an old computer, but here's the funny thing about that. Okay, Glenn, you're right, I have an old computer. But the funny thing is, with my old computer, it still works. Is this The Big Short? No, it ain't. I think I have a little bit more morals and integrity than those guys did. All right, let's get out of this. Let's go back to what we were doing. Let's get out of Humana. Let's get back to here. And somebody wanted to take a look at something. I said it's an old comment. Okay, that's why I didn't make sense. Okay. Wait, how were they not moral? The Big Short? You didn't see The Big Short? How are they not moral? Knowing specifically, selling someone a piece of crap, knowing full well it was a piece of crap, and taking money from honest working people. That, in my opinion, has no morals or no integrity. If you can look someone in the eye and say, hey, this is the price, and knowing full well it's a piece of crap that you're selling them, I call that immoral and a lack of integrity. So The Big Short, yeah, the people in The Big Short who did that crap to us, yeah, no, how are they not moral? Really, Roxy? All right, anyway, let's see what other questions we have. More questions over here. Who was immoral, Barry, Michael, or Banks? All right, I don't remember the names specifically, Roxy. I watched that movie so many years ago. So I don't live in the past. I saw the movie. I saw what they did. I don't agree with what they did. Okay, you can take a look at Susie Orman. She did the exact same thing. She'll get on stage and said, I felt terrible about selling people crap. But she did it anyway. I don't respect people like that. But that's just me. If you know something's a piece of crap, I don't care if it's your job, because that's what the Nazis said. Well, it was my job. I had to do it. No, you don't have to do something like that. You don't have to willingly sell someone a piece of crap. Anyway, Barry is the one who shorted. Yeah, could very well be. So on my day trade, no, I'm not a day trader. Let's keep on going through some of these questions. How do you sell for less and make money? That's what I don't understand. Oh. Elber, how do you sell for less and still make money? Well, you're missing something out of that equation. So let's take a look here for a second. All right. Currently, Elber, at this very moment in time, if you can't see it, okay, this screen right here behind me is live on YouTube. You can go into the other room, put on your big screen TV, and hopefully you have Comcast or some cable station that will allow you to look at YouTube. You should be able to nowadays watch YouTube on your home television. So if you have a big screen TV, this screen here is live on YouTube. So you can see these small numbers. Might make it a little easier. Because if you're on your phone, because you're on the mobile YouTube, if you're on your phone, you probably can't see those numbers. Might make it easier if you could. Okay, so let's see if I can understand this. Write the strip price minus the premium. No. Okay, so Elber, you ready? All right. The current price of Humana, it's right here, $235.77. That's the current price. So if I buy it at $235.77, well, that's the price I paid for it. Now, if I sell it for $235, well, you're right. I'm losing 77 cents per share. You're 100% correct. But what you're missing in that equation is the premium that I'm collecting. And the premium on the $235 is $4.30 per share. So in essence, I'm buying it at $235.77, this price here, $235.77, and I'm collecting $4.30. So I'm actually making $240.07. Okay, so I'm buying it $235.77, selling a covered call, $235. I'm walking away with $240.07. So that gives me a profit, the difference between what I paid for it, the premium and the strike price. They all kind of go together. But in the end, what am I walking away with? Okay? I'm putting up $22,000. I'm getting my $22,000 back plus an additional, whatever it was, $430 per contract. So if I could do one contract, $22,000, I'll make 2.5%. Two contracts, well, and it's whatever that, times two. It's a numbers game. Once you understand it, it's relatively simple. Remember, it was created for a 9-year-old. Strike price. No, Damien, it's a strike price. Okay? The strike price plus the premium. Then you subtract the purchase price, and that will give you the profit. And once you have the profit, you divide the profit by what the investment was. That will give you the rate of return. So it's your algebra. A plus B equals C. C divided by blah equals this. Okay? It's an algebra thing. So that's why you should have paid attention rather than, bothering that little Becky girl 2 seats over. Anyway, it just happened to be Becky 2 seats over from me. All right, let's keep on going. Mark Anthony, you calculate the percentage based on the fact that the option gets exercised. Why do you not base it on the percentage based solely on the premium? The option does not get exercised. Wasn't that what I was doing? Okay. If I'm buying at $235.77, Okay, I'm collecting the 430. Well, I got to subtract 77 cents out of that, then take that and divide it by the purchase price to get my rate of return. That's basically what I was doing. Okay, but it's not going to be the exact because all these numbers are going to change tomorrow morning. Now, I can just see some of you right now. Well, the purchase price is this is that, divide that. Oh, wait a second, the purchase price changed. Let me change it. Well, you're going to do that every 2 or 3 seconds because these numbers change every 2 or 3 seconds. But here, this is the closing prices. It gives us an idea of how to do the math. But during the day when the market is open, you gotta, I don't know if some of you will recognize this, some of you won't. It's kind of like riding blindfolded on a horse, throwing a dart at a dartboard that's on a train while you're blindfolded. That came from Star Trek. Yeah. All right, so hopefully that makes sense. What if you know when the tariffs are on or off? Okay, I don't really pay attention to the tariffs, and I don't pay attention to the news. I'm sorry if that, makes you feel bad about your situation, because the stock market's been around for over 400 years. There have been a lot, I'm talking a lot of people in power that come and go, come and go, come and go. Yeah, well, we are here. We are seeing what's happening here. We didn't see all the crap that happened over the last 100 years, but yet they're still going, and they're still going, and kind of like the Energizer Bunny, and going and going and going and going. So needless to say, some of the stocks that we're looking at have seen World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash of 1929, the crash in 87, the crash in 2000, the crash in 2008, the crash in 2021. There's a crash every decade. So yeah, stocks go up, stocks go down. Where are you positioning yourself? What are you doing with your money? Have you made any money today? So Edwin, you weren't paying attention at all. I don't day trade, so how would I make money today? I'm a weekly trader. I buy my stocks on Monday, I sell my options on Monday, and then on Friday, we see how that all panned out. So did I make money today? I probably did. I don't know because I don't check it in that manner. Because when you sell a covered call against a position you own, the person who has that covered call, they can exercise it anytime they want. And when they exercise it, well, that's when I will find out, with all the T's crossed, the I's dotted, how much money I made on that position. So it always goes that way and that way. Randy, you're saying gotcha. I have no idea what gotcha mean there. I don't. Can you look up IVDA? What the heck is IVDA? I'm kind of curious. Never heard of it before. IVDA. Avita Solutions. It has no options. It's going to be a no. So Randy, I'm kind of curious. Can you explain that a little bit more? Say, Thomas, what happens when somebody exercises? Well, the reason, okay, hold on a second. Where was I? Okay, when somebody exercises their option, they're basically saying, all right, I want those stocks at the price we agreed upon. And then they pay you that price that you agreed upon. Okay, now the option is a separate contract. It's kind of like an insurance policy. Okay, we're going to pay you $100,000 if this happens. Well, your policy premium is $125 every single month. Well, great. Well, every single month you're paying $125. Then when you exercise your option, you get your $100,000. So when you exercise the option, fine. That means someone is taking the stocks from you at the pre-agreed upon price. And then you still make money because that's what we're doing. We're looking to buy a stock at a certain price, sell it at the exact same price, and collect the premium. The premium is what I'm looking to collect every single week because that is usually more than 1% of the purchase price of the stock, thus giving me 1% every single week. All right, so calculate the 1%, blah, blah, blah. What if you know when tariffs are off? The tariffs really don't mean stocks going up or down. Damien, thank you. Do you do any one-on-one classes? Dragon Sky, yes, I do. Or cash secured put. I love cash secured puts. GME, isn't that GameStop? They have no dividends. That's going to be a no. That's if you betting on the downside. Okay, Damien, I know what a put's for. Samuel, nonsense. Gotta love it. James, you're chalking nonsense. Thank you, Samuel. I appreciate, love having haters. They say if you don't have enough haters, you're just not doing a good job. So it's only 2 haters today. We got to come up with some more haters. With the amount of people here, we should have at least 3 or 4. Do you pay more if you roll over the next week? No, I don't pay anything. My thought and my process is collecting money every week. I have X amount. Okay, so I have, let's say, hypothetically, $100,000 in my account. That means I want $1,000. 1% of 100,000 is 1,000 every single week. That's what I want. That's my goal. Okay, how do you choose your 5 stocks for the week? Seems like needle in a haystack. K-Swiss, great question. Now we went over about it about 15 minutes ago, 20 minutes ago. Okay, K-Swiss, you see this? This is a dividend, an EX dividend calendar. Okay, that means each one of these little green dots represents a company that has been consistently profitable for the last 25 years. So basically, Cincinnati Financial has its dividend on the 23rd. So if I want to do a play on Cincinnati Financial, well, the dividend is 87 cents a share. Okay? Now, I'm pretty sure Cincinnati Financial, I think it's a monthly, isn't it? Pretty sure. CINF. It is a monthly, so let's pick a different one. CAH, Cardinal Health, has a 51 cent dividend. Cardinal Health, CAH. CAH. It does have weeklies, great. All right. Ah, fuck. Not the right time to buy. Look, it's at the high of the year. Hold on, let's find a better one. UAL. That's better. Okay, now what were we talking about? Oh, no, wait a second. We can't do that one. MDT, Medtronics. MDT. That'll work. Great. All right. Shelby, hold that thought for a second. This is for K-Swiss. So K-Swiss, are you ready for this? All right. K-Swiss, this is an EX dividend calendar. Basically, each one of these companies has a dividend that they've increased every single year for 2 decades or more. That's 20 years. So any one of these, once they're on the list, I no longer have to decide, well, is it a good company? Should I buy it? Should I not? Every single one of these green dots is an absolute yes for me because it's already made it past the first stage. How do you pick a stock? Well, every single week we look and we check how many different companies are there. Well, this week there's 10,036. 10,036 different companies. So I'm only looking for those that are consistently profitable and have weekly options. That's only about 300. So you take those 300 and you drop it into here. Okay, and those are the only stocks I want to look at. Once they're on my calendar, I really don't care about the price. I don't. I just care about what is the current movement, where is it going, and what is it paying. That's it. Are they consistently profitable? Great, it's on the list. Well, now, what week are we in? We're in the first week of June. Well, these are the companies that have in their dividends in the first week of June. Okay? So if a company has a dividend coming up and I want to collect it, I want to buy it 2 weeks before the EX date, because that's when the stock starts to go up in value. And when a stock goes up in value, well, that's a little bit of information that the person standing next to you probably didn't know. Because there are literally thousands upon thousands of people buying and selling stocks every single day. If you knew when a stock was going to move, what would you do? Most people just buy the stock. Well, why? Because the stock has to go up in order for you to profit. Well, what if you could profit if the stock didn't move at all? That's what a covered call is. So under the pretense that the stock doesn't move at all, if I buy it on a Monday, okay, Monday, I sell somebody the rights to buy it from me for the exact same price I paid for it. So I don't lose any money because I'm selling it for the exact same price I paid for it. Now, for that privilege, that person will pay me a premium. That is my income. So whether the stock moves or not, I really don't care. But I don't want to buy a stock as it's dropping in price. That makes no sense. That's why I look at the charts. Is it going down? Well, I don't want to buy it. Did it already hit the bottom? Now it's going back up? Great. Well, because with the dividend coming up, we know the stock's going to go up. If it's already at the bottom and start moving up, great. I want all the odds and probabilities in my favor. Okay, number one, 80% of all options expire worthless. Great. I don't want to buy them. I want to sell them. I only want to buy a stock when it just before they pay the dividend because the stocks go up in value. Great. That's two things in my favor. Third is I don't want to buy it before the EX date if the stock is dropping. I want to buy it after it hits the bottom and starts going up. So that's three things in my favor. And the fourth thing in my favor, a covered call is one of the simplest, easiest, safest trading strategies there is. And I already know my profit's going to be before I even jump in. It just makes sense for me. Now, when my 9-year-old daughter in 2008 jumped on my lap and said, "Daddy, can you teach me what you're doing?" It had to be simple, safe, predictable, consistent, and no way for her to lose. Now, if any of you have daughters that are 9 years old, you know they can be emotional. Okay? If she started losing, she would cry. And guess what? When baby girl cries, mama gets involved, and guess who's sleeping on the couch? Yeah. Simple, safe, predictable, consistent, and no way for her to lose. That's the strategy I'm giving to you guys. It's simple. Never buy something that's not profitable. Never buy something that doesn't pay you on a weekly basis. And then never buy something at the high. Because where's it going next? Someplace it's never been before? Well, if it was higher, it would be high. If it was worth more, it would be more. Okay, I only buy stocks as they're going up. Okay, I don't buy them as they're coming down. I wait, hit the bottom, turn on, go back up. And I only buy them if they're on my list. And the only way to make it to my list, consistency of profitability and weekly options. There's 10,036 companies. It's not that difficult to find them that are profitable. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's 300 right there. That's why I was trying to ask what would be your personal favorite right now. US Steel, my personal favorite right now. Because it's just giving me a ridiculous amount every week. Ridiculous! Garen, thank you for that. It is 11:18. I got some questions to answer. Let's see what we can do. Elber, you're 9-year-old. Elber is challenging the norms. Elber hasn't met the princess yet. So let's go and introduce him to the princess. Elber, hold on. Because I have videos when my daughter was 11. Okay, now I first taught her when she was 9, and in 11 she was still trading. Videos. Oldest.
Hi, I'm JC, and as a 10-minute trader, in less than 3 minutes, I'm going to teach you how to make more than the average bear. There are 5 keys. Key number 1, there are 156 companies paying over 10% yield this year.
That's her. Okay? Not super smart, just your regular, average, everyday 9-year-old. Let's look at another one.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of...
So, that's me. 15 years ago.
That means every single day you can buy a different stock. Every single day there's a different company paying out dividends. Seriously.
That's my funniest video. It makes me laugh every time I see it. So basically what I'm trying to say, okay? The strategy was created for a 9-year-old. It had to be simple, safe, predictable, consistent, and no way for her to lose. 5 rules. If it's not on the list, it's a no. Automatic no if it's not on the list. To make it to the list, consistency of profitability and weekly options. Just 2 things. Just 2 little things. That's it. Out of 10,000 different companies, I'm sure you can find some that you like. Okay? Dividend Kings, Aristocrats, Champions, Contenders, Buffett's List. Why reinvent the wheel? Why invest your money into a company that's not profitable? That one boggles my mind. It does. I look at the data chain, the data stream. Okay, the data stream, if you don't know what it is, it's every single day the stock trades. Okay, what's there? The high of the day, the low of the day, the opening, the close, the range, the volume. All that information is there every single day. It's all data. So how consistently has a stock increased just before the dividend? That's important information. Once you know that, great. You put it into the calendar. Great, Cincinnati Financial. Great, this time I'm going to buy it. And it usually goes up. What strategy are you going to use? And there is a bunch of them. Okay? Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, iron condor, vertical roll, collarwood stock, double diagonal, unbalanced, deep and wide. These are all the different strategies. Well, great. Which one do you use for what? Well, that's confusing as hell. Remember, my daughter was 9. It had to be simple, safe, predictable, consistent, and less than 10 minutes. That's what I came up with. And that's what I gave you guys every single night. Simple strategy. I would have lost 6,000. Hey, East meet West, how are you today? I'm not quite sure. So the minute you have the stock, you immediately put a covered call for sale. Okay, Swiss, I do it both at the exact same time. Okay, it's called a covered call. So when you hit the covered call button here, it resets everything. Okay, let's do an MDT covered call. It's at 85.50. The 85s are going right there. Just one, there, there, and there. So when I say consistency, I can do this trade every single week because they have they have a strike, they have a weekly option. It's available every single week. So I can buy Medtronics, pick up $47 for each contract I have. Now each contract's costing me $8,400. Does that make sense? Is it profitable? Could you share your thoughts on UNH with all the volatility and all? So Apple V, I can share my input, but you're not going to like it because I don't do stocks over $250 because it's a long way to fall. And if I'm getting the same rate of return on a $10 stock, why would I go to a $1,000 stock? I mean, think about it. I'm limited on what I can do. Okay? All Apple V wants to take a look. Hold on. East meets West. I didn't say if you want margin money, $25,000. Otherwise, any amount over 1,000. Okay. So East meets West. I kind of want to hear your thoughts on why you would have lost 6,000. Okay. Somebody wanted my thoughts on UNH. Well, besides the fact that I don't do stocks over 250. UNH, I believe, isn't that in the 600s, 500s, 600s? It was 600, now it's 300. Okay, so here's your high, here's your bottom. She went up, now she's going sideways. So the question you should be asking, number one, is do you like UNH? That's number one question. Number two, do you want to buy it at $301? That's a big nut to crack. What's the 301 going for? Well, the 300 is going for 545. Not quite 2%, but are you okay with it? Now, me, I don't do this because I don't do stocks over 250 bucks. That's just me. That's how much the stock was down from what I paid if they got called away at 147. Well, why would you let them get called away at 147? Mark and Tony, hey, you're changing screens. Cool. How can you never sell at a loss? Kohl's, you said you bought at 14 a year ago. Now it's at 8. How can you say, wait a minute, how can you never sell at a loss? Kohl's, you said you bought at 14 a year ago, but now it's at 8. Okay. Okay, Mark. Come on. Okay, here's Kohl's right here. Okay, Kohl's right there. Okay, right click, view trades. Wrong account. Let's go look at another one account. That's the wrong one. Is that right? Okay. No, not that one. This one. There you go. No. That one went back to, that one went back to December 13th. December 13th, 970. Sold the 850s. I got 7 accounts. I looked earlier today, and I've had Kohl. I forget which account it's in. Tragedy. Having too many accounts. Well, needless to say, if I buy a stock, okay, now I remember the stock that I bought, the Kohls. I bought it X amount. I dollar cost average, I believe, 4 times. So I bought it originally at 16. Now it's down to about 8, the stock. But as you dollar cost average down, you're able to sell an option closer to where the action's at. So if I bring in 1% every single week, if I bought it at 14, okay? So at 4, let's bring it up. Hold on. Back in December. Yeah. So back in December, at 14 in one of the accounts, and it dropped down to 6. Okay, that is a 50% drop. But here's the thing. Mark, you ready? Let's say, hypothetically speaking, Mark, I bought 1,000 shares when it's at 14. Okay, 1,000 shares at 14. So I'm able to sell 10 contracts or 10 covered calls every single week. Okay. So first week's at 14, so I sell the 14s. Second week, it drops down to 13. So now I'm selling the 1350s. Stock drops again, now it's down to 12. So now I'm selling the 1250s. It drops down again to 9, actually to 850. Well, now I'm selling the 9s of the 950s. And then she dropped down again to 6. Well, now down here, I'm selling the 650s or the 7s. The issue comes when she starts going back up again, Then I got to start rolling it forward. But if I'm making money every single week, now if I bought it 1,000 shares at 16 or 14, okay, now it's down to 6, and I still own the exact same 1,000 shares. Did I lose any money? No, because you never lose money until you agree to take less than what you paid. If I refuse to sell at a loss, okay, just because I bought it at 14 and now it's at 6 or 7, doesn't mean I lost money, because I still have the same 1,000 shares. So I bought 1,000 shares at 14, now they're worth 8. Did I lose? No, because I didn't sell at a loss. I didn't agree to take that loss. So while it's down here at the 6, I'm selling the 7 option, the 7.5 option, bringing in some money every single week. Kachuma, why? Because I'm looking for cash flow. When will you sell? Unless it goes up to X, you will not recuperate your losses. Okay, so I find that rather interesting. Okay, Mark. Okay, now if I bought it at 14, right? And now it's at 8. Well, okay, if it's at 8 and I'm selling the 850s, okay? I'm not selling the 8 because that's too close to where the action is. I'm going to sell the 850s. What's the 850 going for? 15 cents. Well, what did I pay for the stock? $14. Well, 15 cents is more than 1% of a $14 stock. So you don't roll over when it goes down. Of course I roll over. No. Every week I'm either rolling it forward, I'm letting it expire, or I'm rolling it backwards. It always comes down to the numbers on a Friday. And it's always the same questions. What did I buy it for? What's it at now? What option did I sell? What is the safest strategy for me to move my position from where it is now into next week without losing? You can lose money if the company goes bankrupt. So would you consider not lying? Thanks. Oh, another hater. That's 3 for the night. You can lose money if the company goes bankrupt. But let me ask yourself this question. Do you really honestly think Coca-Cola is going to go bankrupt in the next couple of months? I don't. What about Ford? Is that going to go bankrupt in the next few months? I don't think so. Home Depot, Lowe's, IBM, I don't think any of those companies are going to go bankrupt in the next few weeks. So I like what you're saying, and you're absolutely right. Could Coca-Cola go bankrupt? Could the world open up and swallow every single Coca-Cola manufacturing plant on the United States in the world? Yes, it could. Yes, it is that possibility. Could Ford Motor Company get swallowed up by some earthquake or a mudslide? Well, yes, it could. But is it going to? So you're right, you can lose money if the company goes bankrupt. But why would you be investing money in a company that's going bankrupt? Specifically, rule number 1 is never buy something unless it's not on the list. Well, I've never, ever seen a company that is a dividend king, a dividend aristocrat, dividend champion, or dividend contender, a company that's consistently profitable for 20 years or more, go bankrupt. Now, companies do go bankrupt. Yeah, they do. But have they been consistently profitable for 10, 20, 30 years? All right, so that being said, we're past 11:30. Time is gone. I'm going to answer all the rest of the questions. We're going to call it a day. What stock is it? The stock we're looking at was Kohl's. I started doing this slowly in Pokemon. Cool beans. One traveler for life. I have no idea what that means. Kohl's. Tiny Trasho. I have 2,500 in Pokemon, and I sell some items to keep cash flow and maintain profit. That makes sense. Arar, invest in Japan tobacco. Why would I do that? Kyle, how far in the money will you let it get before roll forward? Okay, Kyle, I look every single day. Every single morning, I want to see what the stock did the previous day, and is there something I should do or need to do to avoid any losses. That's why I'm on every single morning for 10 or 15 minutes just to, let's say, weed and feed. There you go. Weed and feed my money crop. I don't know, whatever you want, terms you want to use. I look at it every day just to make sure I'm on top of things. Okay. That being said, you guys over here, we're going to call it a day. Catch you guys again tomorrow morning, first thing in the morning. Okay, and here and now, there we go, and there. You guys over here, have a great day. We'll see you again tomorrow. And I'm going to finish up these questions over here. Avery, hi. Is Roth IRA worth investing into? For some people it is, some people it's not. Can I join the Discord? Mark, DM me with your phone number. I'll give you a buzz. 290 point X, whatever. Sounds good, cool. Adil Hussein. Can you talk about your membership? I'm just getting ready to sign off. My membership is very simple, okay? We meet every day, live online. You watch what I trade. You ask whatever questions you want. Haphazard, what's going on? How are you today? Okay, so yeah, DM me. I'll give you a buzz. We'll chat. Avery, hi. Can I get a shout out? You just got one. Do AVGO. Okay, A1 steak a little late to the party, but okay, we'll take a look at it tomorrow. Do I do one-on-one classes? Dragon Sky, yes I do. Mark, I checked and Kohl's was like $15 last year. It's now $8. You kept Kohl's even though your capital lost 50% of its value. Does a 1% week make up for it? Absolutely it does. I switched to majority dividend stocks, 1/4 AI. Ooh, okay. Hope you, good luck with it. I don't do that. Raj, you're from India. Namaste. How are you today? Little Phoenix, I am wonderful. Yes, no, maybe. Streamer news. What are we talking about? Yes, and no, yes, maybe. Patty, never trust a guy from the East Coast on stock tips. Thank you, Patty. I got some doji in my trousers. Cool beans, Patty. How can I get it? Not quite sure what we're talking about, Phoenix. The best way to make money on the stock market is doing the taco trade. A1, don't even know what that is. Nick, UPS stock. Is a Roth IRA worth it? Well, that's the question. It is for some people and it's not for others. Kimmy, good evening from Brisbane, Australia. How you doing down there? Patty is... Oh, okay. Nick, UPS stock, check with me tomorrow. We'll take a look at it tomorrow. Jack be nimble. All righty. Hey, James, how's it going? Have it dropped a bit? Okay, Matt, thank you. All right, interesting, Matt. My name is Sarah. Of course it is, Matt. I can tell you work hard, which I have a simple definition of work. Anything that has to be done standing up. Okay. Planning for my future. 200 a week recurring investments. Now, streamer news, it's always going to be, where are you putting that money? What strategy are you using? Are you just dumping in $200? What are you doing with it? That's a big question. How long have you been in stocks? Over 20 years. Drazik, how are you doing? Just getting here. We're just getting ready to leave. Plan to hold. Yeah, why? Seriously, why? Stocks go up, stocks go down. Okay, you're up one week, you're down the next. Not wrong with it. Okay, Samuel West. Buy private equity shares today, and Samuel West Incorporated Limited shares are on sale. Cool. When the stock price increases, does the premium increase as well? Yes, they do. Undercover Judger, XRP, no. Steelman, Must be stressful. No, not really. Streamer. So it's not smart to hold dividends over time. Now, streamer, I can't tell you one way or another what you should do. I know absolutely nothing about you. So it would be disingenuous for me to comment one way or the other what you should do. Me personally, I don't buy. My idea of long term is 30 days. Okay? Because stocks go up and then they come down, and then they go up and then they come down. Find a good set of stocks you like, buy them as they're going up, take the profit, let them come back down again, buy them again, let it go up. You got to decide what's right for you. It's different for everyone. I'm looking for 1% every single week. Consistency, profitability. Heard. Thank you. Welcome. All right. XRP's a no. A1 stake. Antoine. Not necessarily. The premium is also dependent on the implied volatility at the time. Well, it's also has to do with the Black-Scholes pricing method. Okay, Black-Scholes pricing method for standardized option. It's a complicated mathematical formula. Complicated as hell. Kane Koo. What's my strategy? It's called Dividend Capturing 2.0. Intel. Manny, I love Intel. Oh, so Matt, out of all those 300 companies, do I pick and choose? No, because out of those 300 companies, when you throw them into a calendar, okay, you're looking like 5 or 10 stocks this week, 5 or 10 next week, 5 or 10 the next week, 5 or 10 the next week. So it's jump in, make your profit, get out. Jump in, make a profit, get out. Jump in, make a profit, get out. Any crop to investing. Michael, I have no idea what you're talking about, but okay. Fresh Kohl. Would you rather watch a tree grow? Interesting. A1. John's Barbecue. Intel depends on China. Okay, whatever. What's your most profitable stock right now? US Steel. Thanks for answering my question. Okay, why do you always wait for it to go up 1%? What is your mindset behind, like, why do it? All right, Matt, look at it this way. I'm 61 years old. I don't have the luxury of being wrong. I need a way of getting a simple, safe, predictable, consistent return on my money on a weekly basis. If you have something that's simpler and easier than what I'm doing, I'm all for looking at it. Now, just remember, I've been doing this for a very, very long time. And a lot of people say, well, you could do that. It's not simple. I want something simple, safe, predictable, and consistent. Great info always. Thank you. You're welcome. Favorite dividend stock at this moment, it would be US Steel. NASDAQ about to make a new high this month. Don't know. I'm just going to play golf every day. Hey, nothing wrong with that whatsoever, but think of it this way. 10 or 15 minutes in the morning, you make your 1% every week. Now, if I have an account that's $100,000, 1 hour a week, that's $1,000 an hour. That works for me. But I'm breaking it up 5 or 10 minutes every single day because I'm buying certain stocks, I'm selling certain stocks. I'm 61 as well, so I'm interested. Hey, 290, PTX, what's happening up? Come back, I'll be back again tomorrow. Did you put those on the calendar you look at? Of course I did. PM me for the next one. No, you got to PM me because I don't know what your number is. All right. How do you feel about offshore oil stocks, market offshore on oil futures going forward? Market sentiment is bearish at the moment. Alexander, I get that. Now, I don't divide my attention by what's hot at the moment. And I definitely don't do sectors. Okay? I look at consistency of profitability and weekly options. That's it. I take the stock, I throw it into the calendar, and the calendar tells me when to look at it. That's it. Yes, I put them in the calendar. Yep. Streamer news, or should I actively invest and sell a moral of the questions? Do I trust it to its job? Okay, streamer news, I'm not quite sure what you mean by that, but okay. You do what you think is best for you. Okay, John Doe, dumb question. But have you ever considered treasury bill? Yeah, no. Okay, treasury bills don't pay 50% per year. Okay? How do you feel about yield mac funds for passive income? No, the numbers are horrible, in my personal opinion. Okay? Shalom, Jahonbek. Hey, Mohammed, scammer. Pleasure to meet you too. PTX. So if you make 1% a week, are you making 52% a year? Actually, I made over 52% last year. This year, it looks as if I might hit triple digits this year, which is kind of weird because that usually never happens. Well, it happened a long time ago. It's just weird for it to happen again. Thank you, Mohammed. That was very nice of you. Fresh Lawrence, good evening. Matt, US Steel seems pretty good. Yeah, but US Steel is at a high. So why would I buy US Steel at a high? Okay, see US Steel right here? Here's the bottom right here, 39. Now it's at 53. Well, that's a big jump. More than likely, there's going to be profit taking. So why would I want to buy now? See, once they start selling and take all this profit, the stock's going to come back down again. Then I'll look at it again. But until then, no. PAN, P-A-S-S. Yeah, we looked at that one yesterday, and the numbers didn't look good. Teach me the best strategy on how to trade gold. I don't do gold, so I can't teach you. Okay? Sorry. Kindly teach me on the best strategy to trade Forex. I don't do that either. Sorry. PM sent, haphazard. I'll give you a buzz in the morning. A1 steak. Oh, John Doe. Guys, use BP equation to see if companies are trading stocks above or below what its stock price is. All righty, John, thank you very much for that. Thomas, if your premium is your max profit, what is the max loss on the option for a covered call? Well, the max loss is if the company goes bankrupt. That's the max loss. So think about it. You think US Steel has a possibility of going bankrupt overnight. If you think that, don't buy it. It's actually that easy. General Dynamics, C-O-D-I, I have no idea what that means. GID consistently goes up. GLD. Oh, gold consistently goes up. Yeah, haphazard, I get it. Gold does consistently go up. However, not really. Because they had a gold rush back in the early 80s, the 1980s, okay, where gold was $250 an ounce, and then it jumped to $800 an ounce, okay? Now, when it hit the high, I think it was in January of 1980, 1981, somewhere in that area, the people who bought at the high back in 1980, 81, okay, they had to wait 30 years to break even. So yeah, gold went up and then it dropped like a rock. And before it went back up to that equal amount, it was 30 years later. And you cannot get, that was 45 years ago. Yeah, haphazard, I get it. I know it was 45 years ago. I was there, I watched it happen. Okay? But gold does not have weekly options. If you buy a brick of gold and put it on your desk, you do not get weekly cash flow from it. Okay? All right, let's keep on going. US Steel is getting bought out at 54 a share. That's why she's just hanging out at 53. Okay, good to know. Matt, do you have any free books written by you? Matt, I have over 1,000 videos on YouTube that tells you everything I do. Kindly teach me the best strategy for trading. Yeah, that ain't going to happen. I don't do Forex, so I can't help you out. Kendrick, if it worked, you wouldn't be trying to sell it. Now, Kendrick, I hate to be the bearer of bad news. I'm not selling anything. Isn't that weird? You wouldn't need to. Well, I'm not selling it. You sold Damien a faulty call. Hold on a second. I didn't sell Damien anything. I don't give advice. I don't give tips. I don't give out anything. I take a look at stocks, give you my opinion. I don't tell anyone to buy anything. Okay, and I definitely never ever told anyone to buy a call. I sell point blank. I don't buy call options and I don't buy put options. I don't buy options at all. I sell them. So what Damien heard is different than what I said. Samuel. All right, Samuel. All right. A1 steak. Pushigoyo. Hello. Would you please help with money? My brother's going through. Okay. Oh, hi. There you go. JL. Are you a macro trader? I'm not quite sure what you mean. Am I a macro trader? All right. US Steel is over $150 during the Great Recession. Okay. Not quite sure what that means about right now, but it's a consistent earning stock. 10-year portfolio is beautiful. Okay. Not quite sure what that has to do with now. This is all speculation. Damien, don't get mad. We all win, we all lose. Okay. Apple V. But still, it's a 75% loss from those times. Okay, not quite sure what it has to do with now. How do I sell covered calls? All right, streamer news. Gonna show up tomorrow. Okay, I'm just answering questions at the moment. Do you have to wait for expiration to collect the premium? No, you get it instantaneously. How do you analyze covered calls to sell? Simple. You look for a good company that you want to own. Buy it and try to sell it for the same price you just paid for it. It's not that difficult. Keep coming back, keep asking questions. I'm trying to answer all these before I'm done. If you want to lose all your money, keep listening to this guy. Stephen Holmes. What a nice thing to say. That makes 4 haters for the night. I must be doing something right. Old trader. I'm Indian, but I don't speak English. How to learn English? Please advise me. Ooh, that's going to be a tough one. All right, Mark. How can you never sell for a loss? Kohl's, you bought 14. We just talked about this a few minutes ago. Okay, Elbin. I finally get it. Look at the chart, buy the option. No, I never, ever said buy an option. Never did. Okay, I don't buy options, I sell options. The stock is low, so even if you have a loss on the weekly individual stock price, since you bought low, eventually it will go back up. Meantime, you charge. Not quite. Mike Sweeney, thank you. How do you analyze covered calls to sell? Simple. If a stock's consistently profitable, if the option premium is more than 1% of the stock price, it becomes a contender. That means there's a possibility it might be good. Then you have to take a look at the motion of the movement. Is it in an upward trend or is it a downward trend? It's a very simple question. Okay, Elber, rent, right, got it. UNCY FDA approval. Okay, Paul, thank you. Peace be upon you, my friend. Prayers and blessings to you. Thank you there. Moo Cow, good evening. So Glenn's example, he sells for a lower strike, but if it's close to the current price, it would get assigned and he does lose money. Are you just rolling it? Exactly, I'm rolling it. Anytime I come close to being called out, a possible opportunity that might lose money, I roll it forward into the next previous week. Because next week's coming whether I want it to or not, so why not have the odds and probabilities in my favor? That's just the way I look at things. All right. Paul from Carolina, good evening. Jose from South Carolina. I got to ask you a question. Okay, Will Reaper. Do you also have to pay interest on margin? Yes, you do. Right or wrong, higher margin results in higher profits. Yes. What stocks or index fund do you recommend to buy and hold long term? Okay, John, I don't do anything long term, so I really can't give you an answer to that question. I go 1 week at a time. I buy something decent, I sell a covered call against it. At the end of the week, I roll it forward into the next week. Every single week, I'm doing something. Every single position I own gives me some rate of return every single week. Holy crap, I got 100 questions over there. PLTR, no. TSM, Taiwan Semiconductors, yes. AMD, Advanced Micro Devices, no. NVIDIA, no. So out of all those four, Sofa Kingdom, only one of them looks halfway decent. Thoughts on market manipulation? I love market manipulation. How do you get 8%? Mine is like 11. Well, I've been trading for a very long time, and I have a decent chunk of money in there, and they apparently like me because I've been there for a while. Raikin, can I make a profit from Binance, whether it's a copy trading or earn? Can you talk about a bit? Okay, I'm getting ready to leave. I usually leave at 11:30, but I got a lot of questions to answer. Mindy, good evening. Steamroller, great teacher, by the way. Appreciate all your free wisdom. You're welcome. Mike Sweeney, thank you for doing this. You're welcome. Haphazard, most stocks are quarterly dividends. What stocks are your best weekly dividends? Okay, haphazard, you weren't listening. There's no company that I know of that pays dividends on a weekly basis. Okay? I said weekly options, dividend investing for weekly cash flow. It doesn't say anything about weekly dividends. It's weekly cash flow. And for that, consistency and profitability and weekly options, the only two criteria. Okay, quarterly, what are your best week, monthly? Well, it's the exact same ones I'm already talking about. Okay, dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Those are right there, 300. Andy, QDTE, RDTE are weekly paying. Yeah, you're right. I don't do either one of them. No, I don't. I like simple and safe. You have to pay margin back, and what about the taxes on day trading? Well, Sofa Kingdom, I'm not a day trader. So, and on the taxes, that's kind of like going to a Rolls Royce dealer and asking what kind of gas mileage you're getting. If you're going to ask a question like that, this ain't for you. Plain and simple. The screen is reversed. Okay. You're not getting my money. Mohammed, I didn't ask for any money. So you're right. I'm not getting it because I'm not asking for it. Why is DMNIF not hitting a zero after it tanked much? I have no idea. I have no idea what that one is, Desert Eagle. How can I get out of the ghetto? You pack up your stuff, whatever you want to take with you, put it in a backpack, and walk on out. It's not that difficult. Can I make a profit from Binance? I have no idea. I don't use Binance. My favorite transgender channel. Thank you, Omar. Sofa Kingdom. Are you doing this in a retirement trading account, or do you have to pay taxes on day trading? How about a corporate account? Corporate account pays corporate taxes. Haphazard. It's true. If you can't afford to pay, don't play. That is a good one. Okay, Mahmoud. Please help me with whatever you can. Okay, yep. Mahmoud. Okay. Raikin, don't spam. Go to your embassy. Looks like our studio. What is this? King Lee, how are you tonight? What list of stocks do you follow? John, dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list. Do you have a step-by-step guide? Mindy, I'm working on it at the moment. I have an older one. Actually, book number 14 is probably a good one. College Talks, weird question. What's the square root of the apartment, nerd? 7. 125 for more oil is crazy. Okay. Grinder data incoming. His name is Max. Cool. It's Tony Hawk. Should I get a CD from Wells Fargo? PAAS. We looked at that one. Do you like Pokemon? Traders lose money. Stick with low-cost index fund over the long term. My Chan, thank you very much. Love that kind of input. Sometimes I swing. Okay, got like that one. Do you prefer coffee or tea? Michael Anthony, on June 2nd, 2025, Refinity versus uploaded. Okay, yeah, no, sorry. Hey, Disma, what's happening? Where do we go next? Michael Burry, Cool Beans, Palantir, no. Hey, sir, wow, how many questions you guys have? Thoughts on CSCO? Where can I get those old books? Oh, Mandy, most of the books are available on Amazon. One of these days, I'll actually get them on my own website. How can we reach you? Paul, DM me, right? Somewhere here in YouTube, you can actually get to my phone number and send me a text. It's actually on YouTube, if you look deep enough. It's news-driven or charts. Okay, hi from Louisiana. Good evening. How can I buy calls and put options and lose minimum? Okay, Junior, I don't buy options. I sell them. Heidi, just want to tell you how much I appreciate you. Your system has helped me so much. Thank you, Miss Heidi. Enjoy your day. You sell options? Yes, I do. So for Kingdom, I bought at 96 as well, blah, blah, blah. At least you got in. I've been a while, blah, blah, blah. Okay, Rick Rapp, so far. Can you believe Carp has been selling billions, cashing out, blah, blah, blah. Can I tell you a joke to lighten the night? Sure, why not? Any quantum computings? Nope. What's wrong with I get weekly cash flow from my gold bricks? You do? Well, Wyatt, I've traded futures for a while. Not that I know of. Can you take a gold brick and get a weekly income from it? Any investing advice for my friends? He has a ton in Robinhood. Would you suggest index? No. What's my channel about? Investing in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. That's what it's about. QBTS, IONQ are going to 0. Okay, I don't do those either. James, 32 minutes ago, a study was published saying the NASDAQ has a burger and bloggers. Okay, I have no idea. SoCal, appreciate the response. I don't know why. Skyrocketed, must be a meme stock, blah, 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 blah. Remember, the comma is trying to tax, okay, blah, blah, blah. Okay, blah, 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 blah. Jesus loves you, blah, 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 blah. Okay. All right, do I use Robinhood? Yes, I do. AXP, that's American Express. Okay, what do we have here? All righty, all these questions. What do we have here? Old Dusty Taco just started. Cool beans. Oh, cool. Drew, thank you for taking time out of your day to teach us this stuff. You're welcome there, Drew. Big Brains, ENB for the win. How about no? Doesn't fit. Are there any situations where you would trade options? I trade options every single week. I just got my dividend today from ENB. Big Brain, cool beans. Midwest, do you get all income from dividends or do you day trade also? I don't day trade. What is your channel about? Acronics. My channel is about investing in dividend stocks for weekly cash flow using a simple, safe, predictable, consistent 1% per week trading strategy created for a 9-year-old. Got to be simple, safe, predictable, consistent, 1% a week. That's the goal. That's what we're looking for. Ego, 50%. I'm trying to invest in stocks to bring in monthly income. Midwest, cool. Keep coming back. You'll learn. Do you recommend Robinhood to invest? I like Robinhood. I don't make any recommendations whatsoever. Thanks. Can you buy the stock on margin when you're getting a covered call? Yes, you can. When selling a covered call, correct. Still following MPW. Yep. If you're an option trader, explain Iron Butterfly. Nicotine, how are you tonight? Okay, Nicotine, I think I told you before, I give away one trading strategy and only one. Okay, and I don't do the Iron Butterfly. It's a little too complicated for a 9-year-old. Okay, that's a good rate, blah, blah, blah. You have collateral, blah, blah, blah. You've forgotten to add in the dividends of the total return. Yes, I'm well aware of that. I don't take that into consideration. You think X has more room to run? Don't know, Kevin, but we'll keep our eye on it. Haphazard, PLS. I have no idea what we're talking about, but okay. And I think we're done. What do you use to track trades? Mr. Pickle, we're actually in the talks with 4 computer programmers to create a spreadsheet for me specifically for what I'm doing. Okay, not haphazard. I'm done for the night. Okay, I'm usually done at 11:30. It's 12:06. I'm out of here. You guys have a great night, and we'll see you again tomorrow. One last question. Why only dividend stocks if premiums higher or more volatile stocks for weeklies? Apple V, great question. Here you go. Without a dividend, how do you know when the right time to buy is? Because stocks do 2 things. They go up and they go down. Well, a non-dividend paying stocks, number one, they don't share the profits. Okay, that's a bad scenario right there. Number 2, in order to find out if a company is profitable for 2 decades, I got to read 2 decades worth of annual reports or quarterly reports. No. And also, dividend stocks, specifically ones that have 20 years or more of dividends, increased dividends, they're more stable, easier to track. That makes it easier to get what I'm looking for. And I want simplicity. Okay. And shit, there we go. All right. Thank you. Have a great night. You're welcome. We be out of here. Come on. And out of here. You guys have a great night. See you tomorrow. Yep. Brock and Load. Love stock options. I do.